Okay. Here's live. La 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 la. Uh-oh. What's this one? What? What the fuck? Alright, I have to do. And my sanity hangs by a thread. Okay, cool beans. Oops, just getting ready to get started. Just getting ready to get started. Alright. There we go. Way to go. Oh, bloody Roy then. Uh-oh, stop recording. Go down here. And we're ready in 1, 2, 3. You like that? I'm the only one here, and I'm counting myself down. 3, 2, 1. Thanks for the call. Hey, Bama Redneck, how are you doing today? Had a nice conversation with Bama today. Nice. It's always nice to hear from people, see how you're doing, all that kind of nice, neat, fun stuff. Why is Facebook looking so awkward over there? Not quite right. A little bit of an adjustment on Facebook. A little bit. I don't know why. Nobody ever really, not that lot of people show up on Facebook. Cool. Ooh, got 6 cameras tonight. Way to go. Hey, Brian, how you doing today? More likes. Okay, good evening. The Searles family. Hey, good evening there, brother. How are you today? Well, it is the 21st of August, Wednesday evening. So we got Thursday and then Friday, and then we are done for the week. Picaris, what's happened? Erica, been looking for me. Well, alrighty, Miss Erica, how are you today? Andrea, how are you? Getting ready to get started. Are we ready? I'm kind of excited tonight. Nice night. Hung out with the kids today. That was fun. Hang out with my head. Got to play with my grandson this morning and yesterday. That was a blast. I have no volume. Uh-oh. Then no volume here on TikTok or no volume on YouTube. Which one? Is anyone else good with the volume? Or is that just the big kahuna? The big kahuna. Alright, it is the 21st of August, 2024. Alright, let's go through the disclaimers. TikTok's fine. Cool beans, thank you very much. Thank you for that. Aunt 370. I have all. Picaris is doing good. Picaris. Oh, Brandon showing up. Way to go, Mr. Brandon. Alright, like I said again, it is Wednesday, the 21st of August. Let's get started. I'm here from 9 o'clock until about 11:30. Okay, I do say if I have more than 200. Any thoughts on Amazon? I do say at 9 o'clock to 11:30. If at 11:30 we have more than 200 people on, I will stay a little bit later. So that's a goal to shoot for, 200 people. Anyway, any thoughts on Amazon? Well, here's my thoughts on Amazon. Ready? AMZN. Now, I had a nice conversation with someone today, and I do have to realize there are other stocks out there that you guys might like and might like to look at. I don't invest in Amazon only because Amazon doesn't have any dividends. And if you don't have any dividends, well, why the hell am I watching you in the first place? Do you know what I mean? Because this channel here is specifically dividend investing for weekly cash flow. So if Amazon has no dividends, why are we looking at them? Okay? That's true. Hey, Bobby G, what's happening? Oh, look at this. Blake Berry just showed up. This is the first time for Blake Berry. How you doing there, Blake? Kohl's. We'll take a look at Kohl's in a minute. Now, Amazon has been operating at a loss for quite the while. All right, we're going to Kohl's and then Verizon. Kohl's. KSS and is Visa? That was Visa. Okay, Visa. I thought it was Verizon. All right, anyway. Yeah, so Amazon hasn't had any profits at all. They're continuously running at a loss. Well, they're one of the biggest companies there is. Okay. Oh, Jeffy boy's got plenty of money, so why is his company running at a loss? I don't know. Abel Mall made me 1% today alone. Cool beans. Nice going, Gallant. All right. So Amazon, as you can see, it had the bottom was back in October. That was 118. It topped out at 200. Nice escalation. Last year is at 133. Now she's at 180. Still a nice run. JWN. Bamarock wants to look at some Nordstroms. JWN. Nordstroms. Okay, I have some Amazon and now is turning a few bucks. So we'll sell it for sure now. All right, Amy, don't get me wrong. If a company goes up, great. Take the profits, watch it. Because what's going to happen is, see where it is at the moment? Get this gap down, and this gap, it just filled. I always tell you guys, gaps have a tendency to fill. Yeah, I got it at 161. Now it's at 180. Right? That's a profit if I heard one. Thoughts on Walgreens? Blake, we will take a look at Walgreens. WBA. Walgreens is one of those companies we follow closely. Thanks a lot. You ready to go, Amy? Okay, so let's zoom in on Amazon. Okay, we'll take a look. 30 days ago, 30 days, 30 days, 30 days, 30 days. Okay, so here we are looking at 30 days on Amazon. No, just it fits like almost any other company we look at. 30 days ago, we're at 182. Hits a high at 185, comes down, then goes up to 190. This 190 back, was that the third or the fourth? Okay? And then this big gap down, hits the 30-day bottom at 152, and then she says, nice run up. Well, how long do you think that run up is going to go before people jump out? But I'm still holding. Yeah, way to go. Anyway, Ron, let's take a look at Macy's. Macy's. Look, Macy's is actually already on the list, so it's already on the list for today. Joe Sullivan, back again. Way to go, Mr. Joe. Okay, what happens when there is a mass selling of a certain stock? Well, everything goes down. I mean, that's obvious. Prediction for Amazon the next 5 years. I don't do that. Okay, I look for 5 days. Okay, now, I'm not delusional. All my friends in high school, I should say a lot of my friends in high school are dying left and right. You're going to get to a certain point. Okay, once you retire, your 60s, late 50s, 60s, 70s, and you're going to see, you get phone calls, you're going to see posts. So-and-so passed, so-and-so passed, so-and-so passed. Yeah, I don't look 5 years ahead, okay? I look next week, okay? I'm looking buying Monday, selling on Friday. That's my main concern. When I see something like this, I say, great, there's my profit. I'll wait a couple more weeks, and I'll put this on the list, and that would come back down, jump back in again, buy, sell, buy, sell. What we look at, we're just looking at Amazon. Blake, I'm in Cohasset. When you come back to Marshville, let's get breakfast at Brant Rock Hop. Well, alrighty then. Bobby G, oh, you're more of a swing trader. I suppose you could say that. I like to buy on a Monday, get rid of it on a Friday. I look at predictable movements. Mike, what do you think of ticker TGTX? A lot of upward pressure, profitable company, buyout Candida. On your Thinkorswim platform, in order to populate the calls the way you have it in on your right side. Okay, you need help with that arrow? We'll take a look at that in a minute. Finance Bro, you hold over the weekend? Of course. Big Brain wants to take a look at Win, arrow of the screen, and I put in the search bar aristocrats. Well, I don't even know if you can look up the dividend aristocrats on Thinkorswim. I really don't know. I haven't looked at it. Why is Walmart jumping up so much? Doc, we had a conversation about this. I seriously thought Walmart was going to take a dump after that big jump, but no, it keeps on going up. Little baby sent Rose. Oh, little baby, that was nice of you. Okay, so Amazon, I usually don't do it because it doesn't have dividends. So when the stock goes down, they're not paying, they're not sharing. So I have no recourse. There's no sense for me to get it. Mr. Joe Sullivan wants to take a look at Marathon. Okay, let's just get started. What sectors do you usually trade? Oh, okay, Finance Bro's new here. He thinks I actually divvy up my stock choices by what do you call it? By sectors. Yep, nope. Here's where I disillusion you, Mr. Finance Bro. Disillusionment coming your way. All right. Dum, da, dum, dum. Here we go. All right, what we're looking at this moment is a calendar. Now, this calendar is inside of Thinkorswim. There are a lot of EX dividend calendars out there. You can find them wherever you can probably go to do a Google search, Bing, whatever you use, Alta Vista. Do they even have Alta Vista anymore? I have no idea. But I take all the stocks that I like. I take all the stocks that I like. Okay, now the stocks that I like have consistent increases in dividends and have weekly options. That is the two criteria and the only two criteria I use. Because number one, if they have consistent increased dividends, well, they're consistently profitable. Because a dividend is nothing more than a portion of the corporate profits that are passed along to me and you. So if a company is consistently profitable, their dividends will go up. It's kind of like a shortcut Cliff Notes. I don't have to read the whole book. I don't have to look at the quarterly reports. I don't have to look at the annual reports. I don't have to read any of that crap. Jerry, how do you feel about Walgreens after what happened with the stock today? Uh-oh. Jerry, I haven't even looked at it yet. Okay, contrary to popular belief, I do not look at the computer that often. In the morning with the morning trading group, in case you guys are interested, I have a morning trading group. And then at night, right here, I just turned on my computer, so I have no clue what is going on in the stock market at all, Jerry. All right, X2D. Okay. Why couldn't your parents giving you a normal name? How do you deal with Intel getting rid of their dividends and how much value your investment lost? I don't think I have. Do I even have any Intel this week? Not there. Oh, I actually do have some Intel, and it's in the money. So apparently, it's doing rather well. I'm interested to know your opinion after today, for sure. All right, Jerry, we'll get there. FDX looks interesting. All right, go on. Let's take a look at FDX. You guys got to stop with the questions because I'm not going to be able to get to anything. Because you know me. If the question keeps popping up, I'm not going to be looking at any stocks. Okay? And this was your opinion after today, for sure. Okay, great. DVAX. Finance Bro. DVAX. Never heard of them. DVAX. Now, Finance Bro. The reason why I've never heard of DVAX is specifically the stocks I'm looking for of those that have increased their dividends consistently. Am I Jewish? With a name like Gardino and a tan like this? Come on. How many Jewish do you know that have a nice tan like this? All right, anyway. I don't even know why you'd ask that question. Am I Jewish? What does religion got to do with anything? They aren't dividend stocks, so don't even look. All right, I'm going to cross it off. That helps. Now, the reason why I like dividend stocks, and specifically those that have increased for more than 20 consecutive years, well, it makes my job a little easier. And absolute worst case scenario, most of these companies are over 100 years old. They've seen a lot. They've seen a lot of crap in the last 100 years of this company. I'm going to stop questions while I go through my little, what do you call it? So if you think about what has happened in the last 100 years with the United States, okay, we got World War I, World War II, Korea, Vietnam, the Great Depression, the stock market crash, the oil embargo, the dot-com bust, the 2000, what is that Y2K crap, the crash in 87, the crash in 2000, the crash in, what am I thinking? 08, and then the crash again in 21. Yet these companies still consistently increase their dividends every single year. So if the economy is going in the tanks, if companies are losing anywhere, because remember in 08 and in 21, some companies lost 50 to 75% of their value. Yet these companies still consistently increase their dividends through all that crap. Well, those are the ones that I want, especially if they're giving me 1% per week. Okay. Now the strategy I came up with was created for my 9-year-old daughter back in 08 when she said, "Daddy, can you teach me how to do this too?" I said, "Okay, sure." So my challenge was it had to be simple, it had to be safe, it had to be predictable, it had to be consistent, and there's no way that she could possibly lose. Because we all know what would happen when the 9-year-old little girl loses money. Okay? She's going to cry. I'm going to feel like shit. Okay? I feel like shit. Mama gets involved, and all of a sudden I'm on the couch for the next couple of days. We all know how that goes. So simple, safe, predictable, consistent, in no way that she could lose. Okay, great. That's the 5 criteria. I had to overcome those 5 things. So here we go. Rule number 1: never buy something you do not understand. If you can't give me a 5-second, a 15, 20-second elevator pitch as to why you bought it, where you're going to get rid of it, and anything about the company, then don't buy it. Never buy something you don't understand. Never sell at a loss. Rule 2. Rule 3: make sure it's consistently profitable. I like 20 years of increased dividends. You guys have to figure out what you like. Pick a company. You like Amazon? Great. They have no profits. I don't know why you'd like them. Nvidia, they got one penny dividend. I don't know why you guys like them. But anyway, it's not for me to say. You guys got to figure out what you like. I'm telling you what I like. You see what I like. You see the trades that I make. I have I was about to say I have nothing hidden, but I do. I have 6 different accounts. I share 3 of them with you guys. What I teach here is only dividend capturing 2.0, which is dividend capturing and covered calls put together. Okay. And the reason why I like dividend stocks is because each one of these green dots, those are the EX dates, 4 dates to remember. The announcement date, that's one. The EX date, that's the most important one. The EX date is the last day the stock trades before the dividend is paid out, represented by these little green dots. Each one of these little green dots represent a company that I personally like. Okay? Now, Kinder Morgan, Citigroup, Ford, Intel, British Petroleum, IBM, Siri, Visa, Wells Fargo, Emerson, Hershey's, Starbucks, Walmart, ExxonMobil, Kroger, Clorox. It goes on and on and on. There's about 300 that I like. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and of course Warren Buffett's list. All right, those are very nice stocks for me and for this particular strategy. Now, what I found over the 20 years of my trading, that stocks have a tendency to increase in value before the EX date. So if I like Target right here on the 21st, I want to buy it 2 weeks before the dividend date. 2 weeks on a Monday. Why on a Monday? Well, because Monday has the largest amount of value for a weekly option. Weekly option consists of time value, stock price, strike price, implied volatility, volume, whole bunch of interesting, nice, neat, fun stuff. So if you really want to know how they come up with the pricing of the stock options, well, you can look at the Black-Scholes pricing method for stock options. It's a little complicated, but anyway, I like simple, predictable, consistent, and safe. That's what I'm looking for, 1% per week. Okay, so let's continue with some of these questions. Simple logic. Yep, I'm going to agree with you. How are you? Did you seriously just ask me if I'm Japanese? All right, I have no idea why. Okay, one more silly question like that, and I have to boot you off because I have really no desire whatsoever. 9/11. Okay, dividend. Chris, dividends are a waste of time. Thank you very much, Chris. Let me make $7 in income with $50,000 invested. Okay, Chris, I don't know why you would do that. I wouldn't do that either. I like 1%. So if I'm investing 50 grand, well, I want to get at least, what's 1% of 50 grand? That's $500. Okay, so you invest your 50 grand, you collect 700. I'll invest my 50 grand and I will get 500. 1% per week is what I'm looking for. Okay, if that interests you, Chris, hang out and just keep watching. Laurie, I've been trying to find a printable list of the best dividend stocks and can't. Okay, Laurie, you ready? Grab a pencil, paper, crayon, mascara, chalk, a rock, scratch it on the wall. Don't really care how you do it. Dividend Kings, 54 companies that have increased their dividends for more than 5 decades. That's 50 years. Dividend Aristocrats, 67 companies that have increased their dividends for 25 consecutive years. Dividend Champions, 25 years of increased dividends. Dividend Contenders, 10 to 24 years of increased dividends. And then, of course, you get Warren Buffett's list. Go to Google, put into the search bar, Dividend Kings List 2024, Dividend Aristocrats List 2024, so on and so forth. The very first 2 or 3 should give you the exact list. And there's one called, I believe it's called Sure Dividend. You can actually enter your email and they will send you an Excel sheet with all the stocks that you want. Okay, are you on the couch because the girl circled, bro? Okay, I gotta put you back in check. Okay, whatever. Pixie, I wouldn't know why or how to come up with an option. Well, how is simple. Okay, you just go to your trading platform, or you can call your broker and say, hey, I would like to do a covered call on U.S. Steel. Okay, you buy U.S. Steel. Now let's sell U.S. Steel at this price for this time frame. Now an option, we're going to get to that in a second. Well, let's do it right now. Before I do that, let me finish with the calendar. Okay, so the reason why I like dividend stocks is because they have a tendency to increase in value just before the EX date. So if I know when the stock is going to go up, it's a perfect time to buy, hypothetically speaking, because that's only one part of the equation. Okay, so if I like Target on the 21st, that's today. Imagine that. All right, let's go here. If I like Baxter on the 30th, okay, I want to buy it before the 30th. 2 weeks preferably over here. So what are we looking here for? Because we'd be looking at stocks from next month, which would be 2 weeks. But anyway, besides the point. Right before the EX date, that's when the stock has tendency to go up before the EX date. Covered call, so you need decent capital. Finance broke, not necessarily so. Okay, my grandson started out with $50. Now, of course, he's only 4 years old, and he's not going to get his little fingers onto that until, what, he's 16, 17, 18 maybe. And we've had a family powwow that when he gets to that age, we're going to make sure that he is, for lack of better terms, worthy of his endowment, so to speak. So we have all the grandparents, me, the ex-wife, and then the other in-laws, and my son and my daughter-in-law, all putting our change. Okay, it's not a huge amount. You know, what do I come up with? $2 or $3 worth of change every week. I throw it into a jar, dump it into my grandson's account, and then we do dividend capturing for him. All right, and he gets a nice little return on leave. So by the time he's 18, he'll have a nice account. So you can start with anything. There's certain things you need to know. Okay, number one is how to do a stock order. Well, that's relatively easy, and if you don't know, someone can easily walk you through it. Number two, you have to have the desire to do it, because it is strange. It really is, because I get 1% per week, which is over 50% per year. My children have no desire whatsoever to be involved with money whatsoever. They don't. They just assume they're going to inherit when I'm gone. Well, they know I plan to live until 113. By the time I get there, they'll be in their 80s or 90s. So it is what it is. Pixie, can you give an example? I missed that. Okay, can you give an example of why you would choose a certain stock? Pixie, hang out, because you're new here. I'm really good with names. Okay, this is the first time I've seen your name. So hang out. I'm going to be here until 11:30. You're going to see me do a lot of examples. And my number one takeaway for you guys is, number one, does it make sense? That's it. Remember, it was created for a 9-year-old. Simple, safe, predictable, consistent, and no way that she could lose. That's the 5 criteria. It sounds enticing. Great. Simplicity. Simple, predictable, consistent, safe. Okay. Why does the board behind you appear correct, but your stock charts are inverted? My stock charts seem to be inverted. A year ago, today, September, October, November, December, January, February, March, April, May. They don't look inverted to me. It looks the same. It depends on what channel you're on, of course. Because the camera, Hicks joined in. Cool beans. Way to go, Hicks. It honestly depends on which camera you're on. Okay? So, on YouTube, Facebook and Instagram, everything looks inverted. See the shirt that I'm wearing? It should say, that's a no. Okay? That's a no. So some of the cameras are inverting the picture. Here on TikTok, everything is normal. Check out the Black Swan again on Target. Yep. Yeah, Pixie, we're going to go over a couple samples a little bit. I'm just going to come up with these questions. Gallant, we'll look at Target in a little bit. Surly Family, Dividend Kings, cool beans. Nike is on the way to fill the gap, cool. Rude Dude, what happens? Rude Dude, good evening. Searle Family, Dividend Champions, way to go. Dividend Aristocrats, way to go. Bama Redneck likes LUV, which is Southwest Airlines. LUV. Alright, we'll take a look. As soon as you guys stop with the questions, we'll start looking at some stocks. Alright. WBA heading to new lows, apparently. Dan. Hey, Medina. We're going to call you 3M for short. Okay? 3M. Okay, Medina, that's a little bit too much. 3M. Alright, okay. We're going to have issues with Walgreens for a while until they get to that solid footing. You get 8,700 stores and they're getting rid of 2,500. Sorry, not 2,500. They're getting rid of 25% of the stores. And the reason why they're getting rid of 25% of the stores, we all know that. We all heard it. Okay? The current administration is not prosecuting theft. They're actually inviting theft. Come on in, steal some shit, walk away, and corporate America will take the fault. Yeah. Okay, we know what's happening. Okay? So here's the thing. You get 8,700 stores. You have a lot of them losing money. So they're going to cut those stores out. Well, sorry, it just is what it is. If I had 8,700 stores and some of them were losing money, well, of course. You're losing money, you got 3 months in order to turn it around. You don't turn it around, your store's getting closed. Simple. Give people incentive. If you can't be profitable, you do not deserve to be in business. It's that simple. So if you have a location, okay, that is consistently losing money, well, you got the higher up saying, all right, no more store for you guys. You guys make it sound as if the corporations owe you anything. They don't. They're in business to make money. So if a corporation decides to open up a store in your area, they're doing you a favor. They're bringing you a product to your area. If you can't get the people in your surroundings to say, hey, this is our store, quit freaking stealing from it so we can have a store here. Anyway, don't get me started on that politics crap. All right, we're going to be taking a look at Walgreens in a little bit. Should I invest in Israel companies? Ooh, dude, I can't answer that question for you. Toki Ray, Macy's. We're going to look at Macy's in a little bit. Yo, Jerry, what's happening? All right, Visa. We're going to look at Visa. Julie, as soon as you guys stop with the questions. TikTok platform shows it correctly. What do you think of XRP? Yeah, XRP is not a dividend stock. Costco may be a dividend stock, but out of my price range. I like to stay $250 or less. Caleb, man, that's a no. Coins, nope. Thank you for that, Redneck. I'm missing the question. I can't go fast enough. You guys keep throwing all these questions at me. Do you teach more of this in your subscription? Actually, Lori, I actually walk people through in the subscription. It's actually it's a morning trading group. We're on every morning, 9 a.m. until when you guys are done with questions. So imagine that. You can actually pay a fee to ask me as many questions as you want. At that time, well, we'll do it again tomorrow. And then we'll do it again tomorrow. So it's $100 a month. At $100 a month, you can ask me as many questions as you want. 9 a.m. we do all our trading. Okay. After the trading, it's open discussion. I'm on Costco. 1,000 call expiring 2020. All right, no name. Good for you. Amazon 200 call. All right, I don't do Amazon. Intel looks like we're going to look at Intel. Important. Yeah. Slick Rich. He's mentioning something that I've heard through the grapevine a while ago. Okay, now the Democrats and Kamala Harris plan on taxing your unrealized gains. So let's say, look at it this way. hypothetically, you bought a house 100 years ago for $50,000. Now it's worth $500,000. They're going to tax you on that unrealized gain. Isn't that wonderful? Let's vote for the Democrats. Yeah. No name didn't sell by call. Okay, hunting all investors in the U.S. Yeah. Thank you for looking at Macy's. We're going to look at Macy's in a little bit. Which option? That's why. Oh, I got 5 more to go. My neighborhood. In my neighborhood, every 5 miles there's a Walgreens. Okay. Purchased a week ago. My brand the time of decay. Blah blah blah. Okay. I just rolled over 401k into a Roth. Cool. How should I pursue to invest? Okay, Mitch, you're new here. I can tell I'm really good with names. Try me on this one. If you have mentioned a question or posted something, and I see it and I read it, okay, inspire me more. You've been here for a while. Jerry, you've been here for a while. Mitch, you're new. Bama Redneck, you've been here for a while. So I'm good with names. So if you're new here, you rolled over your 401k into a Roth. Freaking awesome, dude. Really, seriously. Take control over your money. It's your money. No one has more interest in your money than you do, except for maybe your ex. For your strategy, what would you say volume cap is? That's an interesting question. Taxing unrealized gain, that's insane. Yeah, think about it though. Think about it. I saw a video today with the president of one of the South American companies explaining how the American economy works. It's freaking insane. Okay, think about it. Okay, how does the government run? Well, the government runs on money. Okay, where do they get their money from? Well, they get their money from printing, which is free, which they print for free. Great. Okay, so what do they do with that money? Well, they sell bonds. And who's buying all the bonds? Well, the U.S. government's buying all the bonds. Anyway, it's an interesting video. Holy cow, unburdened by what has to... Oh, Gallant, don't please. Don't start quoting that troll. Okay, never mind. Let's get away from that. So that's all the questions. Great. Let's start looking at some stocks and see if we can hold up on the questions. All right. I got a nice list. We're going to start off with some Cisco. CSCO. CSCO is going to be the very first one we look at today. Now, when you guys give me something to take a look at, I write it down and we just go in order as they pop up. All right. Cisco, CSCO. Now, I like Cisco. I've been investing in Cisco every once in a while when it pops up. Now, remember, I invest by the dividend date. Okay? Whatever date you see on the calendar. So somebody asked earlier, how do I buy my stocks by sector? Nope. Take a look at this week right here. Let me just stay right here. Emerson Electric, Hershey's, RTX, Starbucks, and Walmart. Well, there's like 3 or 4 different industries there. Okay? Archer Daniels, Aflac, Target, and Walgreens. Well, that's 4 different industries. I don't look at industries. I really honestly don't care. I only care about when are they having their dividend, because stocks move up before the dividend date. So if the stock's going to increase in value before the 21st, well, I want to jump in on the 5th and take the 2 weeks before the dividend to take advantage of if the stock moves. But that's only one part of the equation. The other part of the equation is right here. Okay? First thing I always want to look at when I look at this is how I have my account set up. I have my option chain here, my stocks up here, and my chart here. First thing I want to see is the chart. 5 things. Where's the high? Where's the low? Where was it? Where is it? In which direction is it going? That's the 5 things I want to see when I look at the chart. If that looks good, and it only takes about 2 or 3 seconds. High, low, was, is, direction. Cool. Then, if it's not at the all-time high, not at the all-time low, somewhere in between, great, I want to go to the next step. The next step, hold on. And to be clear, that calendar is only showing companies that have increased dividends for 20 years. Thank you, Gallant. Andrea, what is the usual length of time after EX date? After? that the stock will start moving down, usually the very next day, Andrea. Dowie, how are you? Can you explain how to make that dividend calendar? Is it on Thinkorswim? Yes, it is on Thinkorswim. I'll tell you what, now, Dowie, you just signed up today, so tomorrow morning, remind me after we do all the trading tomorrow morning. Hang out, and you and I will have a conversation, and I'll walk you through it. Okay, so don't go anywhere tomorrow morning after the show. How long do you have to own a stock before collecting a dividend? 1 day. Okay, if I want to get it's not on there. If I want to get the dividend, if I want to collect a dividend, okay, now there is such a thing called dividend capturing. It's one of the oldest trading strategies there is. It is the reasoning for my very first book, How to Collect 10 to 20 Checks Per Month like clockwork. Okay, very first book I wrote 2012. What is that, 12 years ago? Okay, that's the very first book I wrote 12 years ago. It tells you about dividend capturing. It's one of the oldest strategies there is. Okay, a company pays its dividend. Here, see these little dates? Each one of these green dots represents a company. 3M, Johnson & Johnson, Key, Baxter, Corning, KHC, Heinz Ketchup, NextEra Energy, blah, blah, blah. So if I want to collect a dividend, I have to buy it before. Johnson I'm not used to talking so much. My throat's not used to this. All right. Johnson & Johnson's dividends right here on the 27th, which is next week. If I want to collect the dividend on Johnson & Johnson, today's the 21st. If I want to collect that dividend, I got to buy it tomorrow, Friday, or Monday. That's it. 1, 2, or 3. Because today's right here. We can't buy it today. You get tomorrow, Friday, Monday. Because the dividend is on the 27th. You have to buy it before the dividend date in order to qualify for the dividend. Let's get back to where we were. Now, remember I told you, the calendar is only one part of the equation. The second part of the equation is the chart. High, low, where was it, where is it, what direction it's going. Great, that's part number 2. Part number 3, what am I paying for it? Right up here, this top line. The last price, the bid, the ask, the high, the low, the open, the close, and the volume. That all has to do with the stock. Think of it this way. A covered call is a 2-part trade. One is the stock. The other is the option. The stocks are traded in New York, and the options are traded in Chicago. Okay, so you buy the stock, you sell the option. Okay, so if I'm buying it $52.50, sorry, $50.52, the $50 strike price for this week is $57. Not quite there. All right, next week's 50 is going for 83 cents. That's the one. Or is it? No, it's not. Because if I'm buying it for $50.52, and if I sell it at 50, I got to take that 52 off of this. And that brings me to 33. 33 is not 1% of 50. Okay? The 51, 9 cents. No. The 51, 31 cents. No. Sorry, it doesn't work. Okay, now I go from the calendar, takes me a couple of seconds. Okay, the calendar, okay, Cisco. Now I go to the trade. I go to the trade. First thing I'm looking at the chart. Okay, the chart doesn't look that bad. Doesn't look that bad. Here's the high, here's the low, that's where it was, this is where it is, this is where it's going. Fine. Now I look at the numbers. 52.50, yep, that's not 1%. Sorry, next. It's actually that easy. Next. So Cisco is going to be a no for this week. Next on the list, Macy's. Now I'm going by the list that you guys give me. Now I have a whole bunch from yesterday that we're going to go over. So let's keep going to question. Alrighty, Mitch, what is your latest book called, and how close can you buy it before the dividend? Okay, the latest book is called Dividend Capturing 2.0. That's my latest book. And believe it or not, I finished it in January, yet I still don't have it available to buy online. Don't ask me why. I got that procrastination thing going for me. And how close can you buy before the dividend? 1 day. Okay. What is your book name? We already did that. Inspire Me More, Gallant, why not? There should be a point where there are not enough people buying your call you're selling. Okay, Inspire Me More. You're under the impression that people actually show up to buy your calls and your puts or your stock options. It doesn't work that way. Okay? Well, you go into a store, let's say the corner store, Circle K, 7-Eleven, Quick Stop, whatever it is. Okay? You go into the store to buy something. That's what you're doing. Okay? Now, the owner of the store, think of him as the market maker. He buys a gallon of milk for $3, he sells it to you for $3.50. His profit is the difference between what he paid for it and what he's selling it to you for. Okay, does he really care who you are? No. Do you really care who he is? No. Same thing with the market maker. If I'm going to sell my stock, if I'm going to sell my gallon of milk, okay, I'm getting $15.55. If I'm going to buy it, I'm going to pay $15.58. The difference between the two is called the spread. In this particular case, it's only 3 cents. Now, you may think 3 cents is not a lot, that's a waste of time, but 3 cents times 35 million, that's a big chunk. That's what the market maker made today. Now, 0.03 multiplied by, what's that exact number? Where was it? 35 million. 35 million. So the market maker today alone on this particular stock made $1,050,000. Now, does the market maker care who buys, who sells? No. But the market maker's job, in order for the market maker to collect this kind of money, he is required by law, if he puts up a price, okay, 69 by 80. So he's selling for 69, no, he's buying for 69, he's selling for 80. So if I want to buy the option, I'm paying 80 cents. If I want to sell the option, I am collecting 69 cents. He is required to fill it at that price. So it's not an issue is how many people are buying and how many people are selling. That's totally irrelevant. If the market maker puts it up there, he has to fill it at that price. Unless, of course, you do a limit order. You do a limit order, then you're stuck. He'll fill it if he wants to. All right? Enough of that. So, Macy's. Let's take a look at Macy's. First thing I want to see. The high, low, where was it, where is it, and which direction it's going. Look at that big drop today. I'm going to want to take a look at that. What the hell's going on there? Now, I do own some Macy's, just to let you know. So let's keep on going. Mitch, okay. Oh, look at this. Oh, wait a minute, damn it. Sometime, Inspire Me More. Don't think it's an issue with these stocks. People buy options in the millions. Yep. Hey, amigo, have a look at Dell for next week. Big premiums, cool beans. We'll take a look at Dell. Ernest, some dividend stocks are simply a trap. You're absolutely right. As you enter for the dividends, it crashes 4 times the dividends. Yep, that's why I don't do those stocks. All right, Mitch, you're awesome. Thank you very much. 1.5 million to invest in high-risk spreads. Where do you get your information? Mitch, all my information is available online. You can go anywhere and get this information. Yahoo Finance, Google Finance, CBOE, NASDAQ, NYSE. You can go any financial website you can get this information from. Okay, you get the high of the day, the open, low, close, bid, blah, 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 all that stuff. You can get that anywhere. The charts, you can get any charting service you want. Okay? You don't have to believe, in fact, I insist you do not believe a damn word I say. I have no licenses whatsoever to do this shit. I don't. I'm just your average guy down the street, around the corner, behind the blue house, who got fed up with what I was being given. And my daughter wanted to know, Daddy, can I trade too? Well, great, sure. Let's find something for you to do. Simple, safe, predictable, consistent, and no way to lose. That's what I had to come up with. Okay? Well, we're looking at Macy's. So let's stay focused on Macy's. Macy's has been, hold on a second. Macy's has been in business for over 100 years. They have name recognition that is very, very, very challenging to buy. You cannot buy the name recognition that Macy's has. Macy's, that was it, New Year's Day parade, Easter parade, Thanksgiving parade, 4th of July parade, Macy's Thanksgiving parade, Macy's New Year's Day parade, Macy's Christmas parade. They've had parades ever since. I grew up in the 60s, 70s, and 80s. Okay, we watched the Macy's parade every single year. Macy's has been around. Now, Macy's, believe it or not, I think, what are they up to, their fifth contract negotiation for a buyout? Now, we've been following Macy's since the beginning of January. Okay, now, I've started this channel in the beginning of January. That's when somebody was stupid enough to say, hey, James, here's a camera, have at it. So, I've been here every single day since then. So, since the beginning of January, we've been following Macy's closely. I buy it, I sell it, I buy it, I sell it, I buy it. Look at it, it's just channeling to the side. Look at that, it's great. But right here, she's dropping down. Now we're in this new situation. Great, well, let's take a gander at it. All right. All right, let's take a quick look at the numbers from Macy's. Because we've seen the chart, the high, the low. We want to look at this area if it's a good fit. Always, always, always if it's a good fit. So let's take a look. I can buy it at $15.58. Good. The $15.50 is going for 18 cents. Well, that's over 1%. And how many days do we get left? We get 2 days left. I'm stuck in the new situation for Macy's. Searles family, how are you today? Now, I'm going to take a look at that a little bit. Galans, can you add Intel to the list? If not there yet, it looks excellent. I believe Intel is there. Yep. Third, I got 3 more to go. 2 more to go, then Intel. All right. So we have 2 days left for the week. The stock is at $15.58. For this week, it's paying 18 cents. You lose 8 cents off the top. You're getting 10 cents. Not quite 1%. Okay. What does next week look at? $15.50, 43 cents. That's more than 2%. I love Macy's at 2%. Okay, I will probably load up with some more. But let's take a look at the chart. A year ago, $14.96. We bottomed out in October and November at $10.42. Topped off in, what is that? Middle of March at $22.05. Well, look what we're doing lately. Last 30 days, here we go. Last 30 days. Now, we took a look at this yesterday, or all during the week, and we said eventually this thing's going to drop. All right? Look what happens. 30 days ago, $16.50. She jumps up to $17.50, drops down to $14.75, and then shoots up to $18. Well, from 14 to 18 doesn't sound like a lot, but that's $4. $4 on a $14 stock. Okay, that's more than 25%. Is it? 4? No. That's more than 22%. That's a 22% increase from the 5th of August, from the beginning of August to yesterday. Okay, now, I say this over and over and over again. If you do not take your profits, the market maker will take it from you. Okay, so here's where we were yesterday, $17.75. If you did not sell at that profit point, the market maker took it away from you. So now we're here. Now I have Macy's, so the value of my Macy's did go down. So let's take a look at mine. Okay, so I actually got a bunch of Macy's. Now, my average cost is $17.49. Well, look where it is now. Wait, that's Walgreens. When you switch accounts, you got to actually switch it. All right, here we go. Last 30 days. Nope, I can't move that. Okay, so here's the chart. $15.45 is where we are now. I bought it at $17.49. Way the hell up here. Okay, now mine's way down here. Do I care? Not really, because I sold the 16s and I got $1.98. I got a fat premium on this thing. Fat. It's a $20 stock, and I got almost $2 for it. That's 10% for the week. Okay, fine. But now, what am I going to do for next week? Well, right now my option is worth 8 cents. I'm going to let it expire, and then next week we'll take a look at it again. So I buy on Monday, I follow it Tuesday, Wednesday, Thursday, and then Friday at 3 o'clock we jump in again to see what are we going to do about that scenario. Or broaden. Okay, toddy, I have no idea what that means. Halloween, I have no idea what that means. Halloween, DXY, never heard of them. I may need to roll my call to another date. How do I do that? The Searles family, I'm not sure if you're part of the morning trading group, because I do roll a lot. I think I rolled 4 positions this morning, because when the stock dropped, well, I rolled it into next week. That's one of the DXY dollar index. Sorry, Halloween, I don't do that. Dividend stocks only. See the name of the trading group? Dividend Investing for Weekly Cash Flow. It's got nothing to do with the dollar index. Sorry. Intel. All right, Mono. We are going to look at Intel. Two more stocks. We're going to look at it. You trade options? Of course I do. DXY on TradingView? Nope. Is a dollar index? Nope. Did I miss you doing Walgreens? Not yet. It's all good. Cool beans. I'm surprised you don't know. Well, look at it this way. Okay? Now, you want to talk about what I know and what I don't know. That's a good one, because I know a lot of shit. Okay? At this moment in time, there are 9,598 stocks available in the stock market for you to choose from on any day. That's the stock market. That's got nothing to do with Forex, nothing to do with crypto, nothing to do with futures. You add all that shit in there, and you're looking at maybe 50, 60,000 opportunities on a daily basis to jump in on, and you're worried that I don't know DXY? Well, does DXY have 20 years of increased dividends? Do they have weekly options? If they don't, then there's no reason for me to know. Okay? DXY. DXY has no options. So, there's absolutely no reason whatsoever on God's green earth that I should know anything about DXY, because it has nothing to do with what I am doing. Now, I can show you a lot of shit that'll make your head spin and say, what the fuck am I doing with that for? Because it has no relevance in my little world. My little world, safe, predictable, consistent, 1% per week. I'm 60 years old. I have no desire to go back to work, which means I have a limited amount of money to live on for the rest of my life. What am I going to do with it? Well, I'm getting a 1% per week every single week. Now, damn it. So I'm going to think for this week or next week, I'm going to actually go into my archives and get my trades out from 2013, 2014, 2015, and post them on my webpage, so you can see that I've been doing this for quite a while. So let's quickly, for the fun of it, for those people that are new and have no idea who I am or what do I do, okay, for those new, let's take a look, okay? It's The 10-Minute Trader, that's my website. You can go to Google search who owns that 10-Minute Trader and when did he incorporate. Yeah, I've had the 10-Minute Trader for over 20 years. Now, we're going to YouTube, to my YouTube channel, which I've had for quite a while. We're going to look at videos, and then we're going to look at the oldest videos. And here we go, right here. Remember I told you about my daughter?
Hi, I'm Tracy, and as you being part of my internet website Club Penguin, which my dad doesn't like me calling it that, but
How do you keep an 11-year-old entertained? Yep, it was a little bit goofy, it was a little bit fun, but it's something me and my daughter did.
I think just one company per month. Just one.
Okay, so this is dated in 2012. So this is a 12-year-old video. And look at me, standing in front of a chart, in front of a board, pointing out stocks on a calendar. Okay, I've been doing this for a while. So why don't I know DXY? It has absolutely nothing to do with my personal interests. Okay, and you really want to talk about what I know, brother, that'd be a long-ass conversation and you'd be so disappointed. All right, back to where we were. Macy's. I'm surprised you don't know. I know a lot of shit. Where was I? Where was I? Where was I? Uh-oh. Wow, I'm missing all these questions. What is it? Macy's. Albert! Great channel. Glad I found you. Well, welcome to the show. To not look at it and trade stocks. Okay. Do you buy calls or sell puts? No, I don't. Source family, I need to get on the morning calls. Well, the morning calls, simple enough. Go to the website right here, the10minutetrader.com. It's in my bio. Very first landing page. Look at it, says simple, safe, predictable, 1% per week. Live nightly training at 9 p.m. Eastern Standard Time. Well, that's what we're doing right now. Right here, live trading, it goes to my Patreon, which is where you sign up for the morning trading group. Let's get back to what we're talking about. All right, more questions. Doesn't make sense. Okay. Hollyweed, I'm not going to sit here and all right. I'm just going to delete you because I'm tired of your shit. I block that one. Tired of that crap. All right. Are you buying calls and selling puts? I don't buy calls and I don't buy put. Well, I do, but not on this channel. Okay, this channel is specifically one trading strategy only. And the reason why it's only one trading strategy is because I want to stay true to the trading strategy I created for my daughter. Simple, safe, predictable, consistent, and no way to lose. If you look at it this way, if you do it properly, safe, predictable, all that kind of nice, neat, fun stuff, it averages 50% per year. If you're not happy with 50% per year, I can't help you out. Now, this is what I call a stepping stone trading strategy. It's one of the safest trading strategies that there is. You buy a stock, you sell a covered call against it. There's no risk. Well, the only risk you have is the company you pick could go out of business. Well, don't pick a loser. What do I mean by that? Most of the companies I look at are over 100 years old. Coca-Cola has been making Coca-Cola for over 140 years. Do you really think just because you buy it, they're going to go out of business? How about Ford? They've been around for over 100 years. General Electric, over 100 years. Consolidated Edison, over 200 years old, and they're still paying dividends. Those are the companies I look for. Those are the risks. Okay, if you buy Coca-Cola, is it going to go out of business? Pepsi, is that going to go out of business? I don't think so. But that's just me. Oh, when DXY falls, yeah, whatever. Do you recommend getting one expensive contract or two cheaper ones? Ooh, Richard, you're new here. I suggest you just absorb as much as you can. All right? It will all make sense. See, by the time you're done, if you're here from 9 p.m. until 11:30, hypothetically speaking, you should get a good grasp of it. Now, I've been doing this live every single night since January 2nd. Okay, we are now into what? August 21st? How many days is that? I've missed 2 days. One day I was sick as a dog. The other day I had to take someone to the emergency room and I couldn't be here. Okay, I think that's a pretty good excuse. 2 days I missed out of the beginning of the year to where we are now. All right, if you do not understand it, I can't help you. It was created for a 9-year-old. Simple, safe, and predictable. All right, now my main takeaway for you is, does it make sense? 1% per week is over 50% per year. If 50% per year is not enough for you, then you're in the wrong place. Good evening, Lucky Larry. How's it going there, Mr. Larry? Let's keep on going. Sarah, how are you? Okay, Hollyweed. Why is Hollyweed still on here? I thought I got rid of him. Thank you. All right. Please share what you do. Okay, Susan. Basically, what I'm doing is I am showing you how to do one of the safest trading strategies there is. It is called a covered call. Okay, there are hundreds, literally hundreds of videos on YouTube explaining what a covered call is. You buy a good quality company, you sell someone the rights to buy it from you at a certain price by a certain date, and you collect what is called a premium. Okay, if the premium is more than 1%, that is what I like. We're currently looking at Macy's. Macy's at this moment in time is at $15.58. Okay, that's the price. If I want to buy it tomorrow morning, $15.58. Great. If I want to sell somebody the right to buy it from me, so let's say I bought it at $15.58. Great. Now I own it at $15.58. That's the price. Now, a call option. As you see all these numbers here, they're called strike prices. 14, 14.50, 15, 15.50, 16, 16.50, so on and so forth. If I'm buying it at 15.50, okay, I want to sell it at 15.50. Now you're probably asking yourself, what the hell are you doing that for? Buying it for 15.50 and selling it for 15.50. I don't care about the stock, to be totally honest with you. I do in a sense, but not really. Okay? My main concern is how consistent are they with their increased dividends. Now, that's totally different than options, isn't it? Well, here's the thing. A dividend is the portion of the profits that go to the investors. That's you and me. We are the investors. Okay? If the company is profitable, it gives us a portion of the profits. If that portion of the profits that we collect continues to increase every single year, year after year after year, those are the companies I want. They're consistently profitable. Okay, I like the dividend kings, the aristocrats, the champions, the contenders, and of course, I like to peek over Warren Buffett's shoulder and trade what he's trading, because he's a better trader. Well, he may not be a better trader than me, but he has more, clout than I do. Ooh, that's a good one. He has more clout than I have. But if I buy it at $15.58, I sell somebody the rights, not the obligation. Okay, think of it this way. If I have a car sitting in my yard and I put a for sale sign on it, John down the street comes by and says, hey, I like your car. Let me give you a couple $100. Hold it for me until Friday. If I don't show up on Friday, you have the opportunity to sell it to someone else next week, and you get to keep that down payment. Same thing. All right, think of it this way. Hey, Tony, I run down to the packing store. What do you want? Hey, grab me a 6-pack. Great. I go back, I get him a 6-pack, and hey, here's a little bit for you for doing that for me. Same thing. If I'm buying it $15.58, selling it for $15.50, I'm collecting this right here. This is called the premium. The premium is more at this moment in time, 43 cents. That is close to 2.5%. For the week, 2.5%. But the big question that you need to ask yourself, do I like Macy's? And do I like Macy's at $15.58? I like Macy's at $15.58. As a matter of fact, let's take a look at my trading log and see how often I've actually bought Macy's. Okay, so if you go to my website, you will notice all the trades I've currently made this year. I like Macy's, really do. It's my best performing stock this year. Okay, so week number 1, CVS, Ford, General Motors, Macy's. Okay, week number 2, Macy's. Week number 3, Macy's. Week number 4, Macy's. Week number 5, Macy's. Week number 6, Macy's. Week number 7, Macy's. Week number 8, Macy's. You can go all the way back. That's January. Here's week 15, week 18, 19, 20, all the way up to week 33, 34, whatever. That was like, I haven't uploaded this week's yet, which was last week's performance. But for the most part, I buy Macy's almost every single week. Okay, you'll look at all my trades. Okay, look at this one. Walgreens, Dell, MPW, Kohl's. No Macy's that week. But for the most part, Macy's is one of the ones I buy on a consistent basis. Let's get back to here. Okay, so if I'm buying it here, selling it here, collecting this is more than 2%. That's what I'm looking for. But does it make sense? Okay, 30 days ago, $16.50. Here's our bottom here, $14.50. She jumps up from $14.50 to $18. That's $3.50. That's over 20% increase in less than, in what is that, 2.5 weeks? Okay, here's the low right here. 2.5 weeks later, we're up over 20%. If I'm up over 20%, I take my profits as mine. Because here's the thing, it's not a profit until you take it. And nobody ever went broke taking profits. Oh, thank you, thank you, thank you. Please share what you do. I already did that. I missed some of these questions. One expensive car. I already did that one. Macy's. Yep, we just look at Macy's. My little brother wants to say happy birthday. Can you say happy birthday, Dixon? Dixon! Happy birthday, brother! I believe Macy's report earnings today, and yes, stocks usually drops. What do you mean? Okay, but think of it this way. What actually happened? Okay, yeah. So Macy's had the earnings today. Big whoop. It was down. Big whoop. Of course it's down because the current administration doesn't want to prosecute for theft. Macy's is one of the big losers for this. Siri, Joe, we'll take Siri. Yep, Siri's on the list. Okay, so Macy's is another big corporation that's going to cut some stores because of theft. All right. So if it's down, did any of the you know what? Let's call some up. Let's get them on the phone. Hey, you work at Macy's. Did they call and tell you to not come to work today because the stock is down? No. People at Macy's don't really give a rat's ass about the stock price. Okay, they're in sales. They go there and they sell their shit. That's what they do. Okay? Never. When I worked in corporate America, okay, I worked at Halliday Lithograph. We printed books, whatever. But never, ever, 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 ever did my manager come to me and say, hey, the stock is down. We need you to cut off early today so we need to save some money because the stock price is down. No, they don't do that. Stock price went down. What does that have to do with anything? Okay, that has to do with the market maker. Okay, so 1555, 1558, there's a 3-cent difference. 35 million shares. That means the market maker made over $1 million just today. Just the market maker. Now, are these buyers and sellers? Are these buyers or are these sellers? Okay, it went from 1775 to 1445. That was a big drop. Okay, but does it have anything to do with the company, or is that just the market maker manipulating the numbers? That's a serious question you need to ask yourself. Let's go to chart. Let's get rid of that. Okay, now here's the big chart. Now there's a whole bunch of different charts you can use. This one I can add a lot of crap onto. I don't. I like things simple. I do. All right, so here's where we are way over here. Okay, so let's zoom into that. All right, now see these blue lines down here, these blue ones? That is the average volume. Look at the average volume. Okay, the average volume for Macy's on a daily basis is 4.5 million. See, 4.5 million is the average. Okay, at 4.5 million, the market maker makes 3 cents a share. Okay, 3 cents a share. Okay, multiply that by 4.5 million. Okay, so on a normal average day, the market maker makes $135,000 a day. Okay, that's nice. But today, 35 million. Okay, so does it have anything to do with the company, or is that the market maker manipulating the numbers? What's different in the company? I'm not talking about the stock price. Let's forget about the stock price for a second. What difference happened in the company? You go to the store at Macy's. Did they close it early because the stock price is down? Did they cut the sales staff because the stock price is down? No, people just keep going back. Sig, what's happening there, Mr. Sig? Just joining us, cool beans. So, did anybody working at Macy's get a phone call and say, hey, we need to cut prices, you need to take the day off? Doesn't happen that way. But the market maker is the only person who controls the opening price. Okay, the high, the low, that's all created by you and me. But who starts it off? Who draws a line in the sand and saying, here's the starting point for today? That's the market maker. So you get a little bit of bad news, say, hey, let's take advantage of the situation. Let's take away some of these profits from these people. Because if you don't take your profit, the market maker will take it away from you. She goes from here, which was what, 15 2 weeks ago? Now she's at 18. You didn't take your profit, you dumb shit. You should have taken it. I look for 1% per week. This is more than a 20% increase. Okay, you didn't take it? boom, it's gone. It ain't a profit until you take it. And nobody ever went broke taking profits. Nothing went wrong with Macy's today. It's just the market maker dropped the price. Now he dropped the price, 4.5 million usual, okay? 4.5 billion. Look at little blue dots. That's the average movement for the volume of how many shares traded. Today, 35 million. The market maker made $1 million today, where normally he makes 135,000. 135,000 a day is what the market maker usually makes. Today, he made over $1 million. Why? Because he took all the profits away from the people who didn't take their profits when it was available. Of course, it was the, the earnings report. Okay, that's enough about that crap. All right, Macy's commented their sales are down and they are cutting their sales staff. Sign of retail times. Yeah, I get that. All covered calls paid off, but you got crushed in the underlying. Yeah, but here's the thing. Who said that one? Happy person. Okay, think of it this way, happy person. Let's go back a little bit. We're going to go back all the way to here. Okay, hypothetically speaking, let's go here. Let's take a look at Macy's. All right, Macy's doesn't have a dividend today, but they did have their earnings. Okay, the earnings were today. When were the dividends? July? Nope. Not August, not July. June? Where the fuck are they? There we go, right there. June 14th. All right. Let's get rid of that. All right, here we go. You ready? Didn't know what side to stand on. June 2024. That was what, a couple months ago? There's your dividend right there, the 14th, which means they're having another dividend next week every 90 days. Macy's has dividend every 90 days. Okay, 17 cents. Great. Here comes an interesting question from you. Let's say this one's specifically for happy person. You ready? You ready for this? Hypothetically speaking, I buy 1,000 shares of Macy's in November at $10. Okay, I'm entitled to 1,000 dividends. By 1,000 shares, I get 1,000 dividends. The dividend is $17 and 17.5 cents. That's the dividend. So if I buy it here and I never sell it, I will continually collect that 17 cents every 90 days. All right? Now, if I bought it at $22, I bought 1,000 shares at $22, and I never sell it, I am entitled to 17 cents per share. So at $11 here in November, I'm getting $174 every 90 days. Okay? I bought it at 11, I get $174 every 90 days. If I bought it at 22, I'm getting $174 every 90 days. So does the stock price have anything to do whatsoever with the dividend? Absolutely not. What happens every single year? Well, every single year, Macy's increases the dividend. So this year, it's at 17 cents per share. Next year, it might be 18, 19, 20. Who knows? But Macy's has consistently increased their dividends consistently. So do I really care where I bought it? $11, $14, $17, $22. No, I honestly really don't care. Remember rule number one? Never, ever, ever buy something you do not understand and you do not want to hold long term. If I like Macy's, I'm going to buy it and I'm going to hold it long term. What else am I going to do with it? I am going to sell covered calls against it. So if I bought it at 11, right, I'm not going to sell the $11 strike price. No, because there's a chance that that could be called out and I could lose the opportunity. Everything has to do with the numbers. If I jumped in at 11, well, more than likely I will sell the 1650s or the 17s. I'm still collecting something along with my dividends. Now you remember, most people invest in the stock market and hold it for decades. years or decades. All right? Excuse me. Most people, when they buy stocks, they will buy it and they will hold on to it. And they will collect the dividends or they'll do whatever. Here is a little bit different. I buy a good quality company. I like Macy's. I do. Do I care that it dropped that much? Not really. Okay? Now, I bought Macy's. Okay? Here's my trade right here. 1,320. I got 2,300 shares. My average cost is $17.49, which means I got 25,000 tied up into Macy's. Like, that's AT&T, damn it. Okay, there's Macy's. Still the same. I still got 25,000 into Macy's. Yep, my average cost is $17.50, which is right about here. Well, it's right here now. So next week, am I going to sell the 15s or the 16s? No. I'm probably going to end up selling, what are we looking at for next week? Not that one. Here's next week's right here. So next week's, I'll more likely sell the 1650s. See what the 1650 is right here? Okay, it's here now. Okay, so next week I'll more than likely sell the 1650s or the 17s. Okay, the 1650s going for 11 cents a share. Is that 1%? No. It goes back to my cow analogy. I don't know if you guys remember my cow analogy. If I buy a cow and my cow gives me a gallon of milk every single week, good for me. Yay. Well, what happens when the cow gives me a half a gallon or 3/4 of a gallon or even a pint or a quart? Do I get rid of my cow? No. It consistently increases its dividend every single year. My investment is to make money safely and not to lose. The only loss here is on paper, unrealized. Now, unrealized loss. It's not a loss until I take it. It's not a profit until I take it. So am I worried that it dropped? Hell no. As a matter of fact, I might even think of jumping in, buying some more, and dollar cost averaging down. So if I buy some more tomorrow or Monday, I can't do it tomorrow because all my money's tied up. Seriously, 98% of my money is invested on Monday morning. So I have no money on Monday morning. It's all invested. But what I do have is I have 1%. Okay, so let's say hypothetically I have $100,000. Okay, so $100,000, 1% of $100,000 is $1,000. So I invest my $100,000 on Monday. Well, I have no money left, but I do have that 1% that came into my account on Monday. So I have $1,000 to spend, and I get that $1,000 every single Monday because I buy my stocks on Monday and I sell my covered calls on Monday. 98% of all my money is invested at all times. I have a debit card and a credit card attached to my trading account. So as I sell this option on Monday, the 16 and a halves, I have how many shares? Was it 23? Yeah, so I got 2,300 shares at 11 cents times 23. That's 11 times 23 is like $300 or $400, something like that, on Monday, just on the Macy's shares. Now I will do that every single week. Will I sell at a loss? I try my best not to. Now I have to admit, a couple of times I got distracted, and some of my stocks did sell at a loss. AEO last week sold at a loss because I had a computer glitch. My clock on my computer was saying 3:45, and the market said nope, it's 4 o'clock. Ding ding ding. So I couldn't roll my AEO forward last Friday, so I ended up taking a loss, and I didn't want to. Anyway, it just happens. Sometimes it happens. All right, CMG, I'm going to ignore you for the rest of the night. This is stupid, silly questions. Do you need a large account to start the strategy? No, you don't, Laurie. Okay, my very first time I started out with like $12,000. That's not huge. My grandson's starting with $50. Of course, his strategy is a little bit different. He's only 4 years old. I do it for him. Can we look at Walgreens? Searles, we are going to look at it. Happy person. Dividends aren't going to help much when the stock goes down 15% a day. Oh my goodness. I like happy days. I bought Macy's in November for 3. Oh, what the hell are you holding on to it for? Okay, I'm missing some questions. Dum da da dum dum. Uh-oh. Wow. Oh wow, I missed all these questions. Why would you care if Macy's is up 20% if you make your 2%? I don't care. Honestly, I don't. Seriously. If I buy the stock, 1558, I sell, let's forget that I own it at 17. Let's say hypothetically tomorrow morning I wanted to do this trade. I wanted to buy it 1558, sell it for 1550, collect that 43 cents per share. That's over 2%. The stock has to stay above 1550 by Friday in order for me to move on to the next company. But I will always collect that premium as soon as I sell it. So if I buy it tomorrow morning, the stock, then remember this is 2 different trades. One is the stock, one is the option. Now, when I buy the stock, that is my entry point, and that will never change until I dollar cost average down or I sell it. Okay, so wherever you stepped onto the merry-go-round, that's your price. My current price, I say, was 17.5, somewhere in that area. Okay, but if tomorrow I do this and I collect my 2%, okay, because 43 cents per share on a $15 stock is more than 2%. If the stock then turns around and shoots on up, I really honestly don't care. I'm not looking for capital appreciation. I'm looking for consistency in my cash flow. That means I like Macy's. I continue to buy it. Now let's go back here for a second. Macy's, no. Macy's, no. Okay. Here we go. Macy's, right there. Okay. April 1st. Okay. This is one of the trades I did this year. This is April 1st, covered call, 1,300 shares of Macy's at 1975. Okay. I sold a $20 call strike and got 35 cents. Now, 35 cents is more than 1% of $19. Do I care that I bought it at $19 and I sold? No, I made my 1%. That was my goal. Okay? So that particular week I made 1.5%. Okay? The very next week I sold Macy's again, because apparently I didn't hit my target. The 1950, okay, see it? 4.8, which is a week later. 4.1 was the first one. 4.8 is the next one. Macy's, 1,800 shares at 1950, and I got 21 cents. Well, that's over 1%. Do I really care what happens to the stock? No. I just want to collect that premium. Okay, week number 16. Week number 16. Again, Macy's, here's a good one for you naysayers. $19.50. I only got 14 cents, which is less than 1% for this particular week on Macy's. But the other positions brought it up to 1.19%. Okay, so I made 1.19% that week. Oh, again, Macy's again, 1.19%. The 1950, I got 14 cents again. Week 18. Week 18, Macy's again, 1950, I got 14 cents again. That's 3 weeks in a row, I got 14 cents per share, a little bit less than 1%. Okay, but again, this week I made 2.61%. Okay, week 19, 1.24%, Macy's again. Oh, look at this one. 19.5 call strike, 93 cents a share. That's more than 1%. As a matter of fact, that's over 4% on that one trade. So I have no problem whatsoever buying Macy's and holding on to it for a long time and continually rolling it forward, continually selling covered calls against a company that's over 100 years old. Okay, please do not make this more complicated than it needs to be. Rule number one, it's simple. Okay, remember, 5 criteria: simple, safe, predictable, consistent, and no way to lose. Rule number one, never buy something you do not understand or you do not want to hold long term. If you do not want to hold Macy's long term, don't buy it. If you delusionally think that you can buy something and it's not going to go down, terribly sorry. It's a 50-50 shot. You're going to buy something, it's going to go down. On the flip side, you're going to buy something, it's going to go up. That's all stocks do. They go up, they go down. They go up, they go down. That is all. Do not expect them to come to your house and tuck you in at night and then wash your car and then fold your laundry. They do not do that. They go up, they go down. That's all they do. Never buy something you do not want to hold long term. Bad earnings news today at Macy's. Yep, I knew that. My first covered call expires Friday. I'm nervous Nelly. Well, Larissa, Larissa, remind me on Friday night. If you're here, or Saturday, I'm kind of curious on how it worked for you. Because you just said you did your first covered call. I have no idea what you bought. I have no idea what you sold. I know nothing at all about it, but I want to hear. Happy person, how can you write calls if you sold your underlying dough? You're under the impression I sold it. I'm kind of curious where you got that impression from. Because I told you, I never ever sell at a loss if I can help it. Sometimes I make mistakes. I made a mistake with AEO last week. The stock market closed before I can close out my position. I was going to roll it forward to this week. Didn't get that opportunity because I was at my son's house last week. I don't know if some of you remember this or not, but he had an electrical glitch which crashed my computer. I think it was 3 or 4 times while we're online. We're online 3 or 4 times. Crashed 4 times. Okay? It affected my internal clock on my computer. So my computer said 3:45 on Friday. 15 minutes off. The market closed. I didn't get to roll forward on my AEO. All right. OXLC. Sorry, Sasha, never heard of them. I see you might own a stock and cannot sell another call. Bad question. No, once you sell a call on a stock, okay, so if I buy 100 shares of Macy's tomorrow morning and I sell a covered call against it, I cannot do anything with that stock because it is pledged against the call option. So if I buy the stock at $15.50, I sell somebody the rights to buy it from me at $15.50, I cannot do anything with that stock until I close out that option order. Either it expires on a Friday, all right, or I buy it back, one or the other. But you can't, once you sell a covered call against your position, you're basically just going to sit there and wait for it to expire. Or whoever bought the option, wait for them to exercise it or not. More questions. Happy person. The dividend of 68 cents per year doesn't offset a $2 loss in a day. Boy. Okay, happy person, you're making this more complicated than you need to be. Okay? Remember, rule number 1, never buy something you don't want to hold long term. Rule number 2, never sell at a loss. Baffles my mind why you're drawing on. What's it, drawing? Is that the right word? Drawing on? Or carrying on about this? Okay? I still own Macy's, not this account. Hold on. Okay? I still own Macy's. Okay? My average price is $17.49. I have no intention whatsoever selling it at a loss. Okay? It's not a loss, it's not a profit until I take. Now remember, there's 2 entities here. Don't think that the option, if it expires worthless, I'm losing money. or if the option goes up. The option is totally separated from the stock. Okay, when I buy the stock, and this one I bought at $17.49, okay, I have no intention whatsoever of getting off of that merry-go-round at anything less than $17.49. Now, granted, the stock is at $15.45 today. I honestly, and I don't know why you don't understand this, I honestly really 100% don't care. And I don't know why you don't understand that. Because what does the stock do? Look, it goes up, it goes down, 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 it goes up, it goes down. That's all it does. Now, I have no intention on selling it. This week, it's at $15.45. Big deal. Next week, I'll sell the 16 or the 1650s. I will still bring in cash flow. I will not sell Macy's until it goes over my price, which is, what was it, $17.49? Was that what it was? Whoops. Yeah, $17.49. I have no intention whatsoever of selling Macy's until it gets past $17.49. And will it get past $17.49? Well, let's look at the chart. Okay, let's go back. Okay. The bottom of the year is $10. The top of the year is $22. Do I really care that it's at 15? No. It's between the low and it's between the high. Okay, it has been here before. This is not uncharted territory for Macy's, and I don't know why we're still drawing on about Macy's. Let's move on to the next one. If you bought Macy's on Monday, there's no way premiums bring in 1% at or near initial purchase. Oh boy. Okay, Monday, okay, for clarification, Monday, Macy's opened up at 17.6. See right here, this price right here. Open, high, low, close, range, I don't know what the Y means, and volume, 5.1 million shares. Monday, she was at 17, what was it? 1770 is what she opened up at on Monday. All right. On Monday, what were the premiums for the 1750 call strike? I honestly don't know. I would have to go back and take a look at Monday's numbers. At this moment in time, I honestly don't know what Monday's numbers were because today's Wednesday. Do I care what Monday's numbers were? Well, I only care about Monday's numbers on Monday. Okay? So I did make, wait a minute, what did I get on Monday? Okay. 816. Oh, okay. So I sold on 816. See, 816. That wasn't this Monday. That was last Monday. And I sold it at 198. Now, I'm not sure about your math, but $1.98 on a $17 stock, well, that is close to that's over 5%. Okay, and that was 2 weeks ago. So I got 5% 2 weeks ago. Okay, look, the numbers are right there. 8/16, 23 August, which is this Friday, I sold 23 contracts at $1.98 a share. $1.98 a share on a $17.50 stock. $17.50. Okay? I got $1.98. That is over 4%. Well, what is it exactly? Hold on a second. Let's get the calculator out. Clear. $1.98 divided by a $17.49 stock comes to a grand total of 11. Okay, I was wrong. It's 11%. But that was for 2 weeks. That was last week and this week. That's 5.5% per week. I'm not quite sure what you're getting at. Because what you're saying, I forget who said this. I can move on to the next one. Yeah, let's move on to the next one. The Mortgage Magician ASC is not okay. All right. Are you buying the shares or buying the options? I'm not buying. I don't buy options. I sell options. I'm missing a lot of questions. Holy cow. All right, we're going to get off of Macy's. We're going to go on to something else. You don't have any money left, though you buy more because you're at 1750. All right, I'm going to ignore you. I'm going to something else because you're not making any sense. So I've been doing this for over 20 years, and you're new here. I have no idea who you are. I have no idea what your experience is. All right? But I just pulled up my chart, and I just pulled up my trades, and I show you I made 11% on Macy's for the last 2 weeks, and you're arguing with me. So I have no desire whatsoever to entertain your silliness any longer. Down in the mud. We can't read that. Okay, down in the mud. You may not know this because you're new here. I'm very good with names. This whole thing you're looking at here, this chart here, is live on YouTube. You can watch it on your big screen TV at home. Okay, I do that specifically so that people can read the numbers. Because you may not be able to read these numbers on your laptop or your iPhone or your iPad or whatever. But if you're on a big screen TV, hypothetically, you should be able to see that. Why are some weekly summaries green and others red? See, you're new also. Green is when you buy, red is when you sell. So all those, see, all these green and all these red, come over here and look at right here. Okay, this is the time of day when it was traded. Okay, this is exactly what the trade was: diagonal, signal, a single, covered, single, blah blah blah. Okay, here, sell, buy, sell, buy, sell. All the reds are selling and all the greens are buying. Okay, so when I buy and when I sell. Okay, where were we? Come on, guys. Let's get back on track. We haven't covered very much of anything, and we're at quarter of 11. Quarter of 11, got 45 minutes, and we're still on like our second stock. Come on. All right. Mortgage Magician, it is a tough position to be in, but there are ways to play defense. Thank you very much, 86 USA ASTS. No, sorry. Blah blah blah. Use on Bitcoin. Now, Lola, I do like Bitcoin. I like the theory of Bitcoin. At this moment in time, I cannot pay any of my bills with Bitcoin, so I'm going to sit on the sidelines until. Yeah, Johnny Ringo, I like that. Are you buying the shares or buying the options? All right, is that email for now? I buy the shares and I sell the options. I do what's called covered call writing. I'm looking to capture premiums on a weekly basis. Felix, how you doing? You ever play penny stocks decades ago? I don't do penny stocks anymore. You'll find out once you start playing in the penny stock market, you can get in easily. Getting out is a pain in the ass. How's Clorox doing? CLX. Let's keep going. Do you always roll call on Friday versus letting expire if it will not be called away? Okay, Mr. Darrell, it's an excellent question. Okay, I'm going to say exactly what John F. Kennedy said many years ago. We cannot answer the questions of tomorrow with the information we possess today. Okay, simply put, if I buy my stocks on Monday, I have no idea what I'm doing with them until Friday gets here. How's it going? RWP Jev? I'm doing lovely. Neil, show me how you get 1%. What do you divide by to get the percentage? Ooh, your favorite tax lady. Ooh, favorite tax lady. You and I need to chat. We have some people here that are interested on how to trade without paying taxes. Hopefully you know, because there are plenty of ways of doing it. I want to see how you would handle that question. All right, so Neil, you want to see how I get 1%? Well, you ready? Ready, Neil? Here we go. Macy's, 1558. Okay, if I sell the 1550s, I'm getting 43 cents per share. So let's whip out our calculator, clear that. 43 cents a share. What is my purchase price? 1558. 2.7%. That's not 1%. Sorry, it's 2.7%. I look for good quality companies. Okay, I consider Macy's, a 100-year-old company, a good place to put my money. Sell it. Email. Can you make a covered call for higher than you bought it? Or does it have to be close to the current price? You could do anything you want. If I buy it at 1558, I can sell the 17s if I want, but the 17s are only going for 8 cents a share. That's not 1%. I could also sell it for $14. If I buy it at 1558, I could sell it for 14 and pick up $1.40. But that's not 1% either. More questions. The word you were looking for is dwelling. Oh, yeah, why are we dwelling on this? Thank you. Sage, if you're making money on the options, are you really behind on the Macy's? All right. Who asked that question? Sage. All right, Sage, you're looking? Macy's. Profit and loss year to date, 18,000. That's my top one this year. Okay? Macy's, 18,000. Okay, the next one down is 5,000. The next Marathon. So to answer your question in short form, I'm doing rather well with Macy's this year. It's my number one performer. All right, let's keep on going. Monday, it was more than 1%. Yeah, you're absolutely right, it was. Thank you for being patient. Hey, Steve, how are you? Steve, you've been here before. I remember that. Erica, can we move on to the next one? Yes. I sold Monday's Macy 18 for 76. Wow, that's nice. Okay, I would bet that you do not actually make any serious money. You see, now, Jose, that is subjective. Because if I have $100 in my pocket, I am richer than more than half the people on the planet. Subjective. Okay, do I make serious money? It depends on what you consider serious money. So, if by chance, get out of that. Keep going. There. All right. Account number one started off at 117. It's currently at 142. I already taken out $28,000. 46.1% so far this year. We're just over half of the year. Account number two, 100,000 cash, 100,000 margin. It's a margin account. At this current moment, it's $167,000. That is a 69% return so far this year. Account number three, relatively new account. Okay, 100,000 cash, up 131,000. So up 31,000 in a month and a half. I'm not quite sure if that's serious money for you or not. Some people it's not, some people it is. But like I said, it's all subjective. Okay, being in the United States, just being here, you're richer than more than half the people on the planet because we have so much available. And I'm not even going to go into Yuri, never heard of it. XLE trading range strangles at 20 delta for credit. Willie Johnson, XLE. Who the heck is XLE? ETF. Yeah, no thanks. I don't do ETFs. All right. So XLE. Let's see how often do they pay out their dividends. XLE. Now the reason why I'm asking is because I would like to look at companies that consistently increase their dividends. So how far? Okay, come on, really? 2017, and where are we now? 2024, 7 years. Okay, Okay, I don't like anything that doesn't have 20 years of consistently increasing their dividends. Let's take a look at this one. 45, okay, to 87. Awesome. To 46, they just cut it in half. Explain to me why that's good. 46, 48, 51, 53, 51, backwards, 58, 56, 59, 179, 57, cut it in half again. 50, down again. 54, 52, down again. 52, 53, 59, 70, 82, 85, 86, 80, down again. 71, down again. 67, down again. 80, 73, down again. 72, down again. Explain to me why I'm looking at a company or an entity that has 7 years of dividends and go up and down, no consistency in their profitability whatsoever. XLE is a no. Sorry. How often do your contracts get exercised? Exercise is one word, expire is a different one. Now, exercise, I would say maybe once or twice a month. Maybe once or twice a month. Expire 70 to 80% of the time. Big Lots chart is pretty ugly. Does it have a chance for turnaround? Big Lots, I seriously doubt they have 20 years of increased dividends. On a weekly basis, what is the percentage of your stocks being called away? Ooh, well, let's just take a look. We're in Wednesday. This account, nothing is in the money. Nothing being called away. This account, 1, 2, 3 being called away. This account, nothing being called away. So it changes every single week. There is no consistency in that pattern. I'm trying to learn. It's just so overwhelming. Well, Tasha, if you think about it, it's really not, because you know some of the companies I'm talking about. Okay, hold on a second. All right, Tasha, see if this makes sense. Baxter, you may not have heard of Baxter. GLW, that's Corning. I don't know if you know who Corning is, but you know that white pots and glassware that you put into the oven. That's Corningware. Okay. Pepsi, Kimberly-Clark, General Motors, Bank of America, Waste Management, Heinz Ketchup, Halliburton, NEM, Newmont, JMW, Nordstrom's. Any Newmont? Wait a minute. NEM is Newmont. Nucor, VFC. Shit, I don't know who the hell VFC is. It's VFC Corporation. Occidental Petroleum. AIG, Albemarle, Devon Energy, Coca-Cola, T. Rowe Price, Altria, Macy's. Most of these companies you've heard of. Okay? So if you've heard of most of these companies, usually you're familiar with who they are. So never buy something you do not know or you do not understand. I'm pretty sure you know DE, John Deere, Fifth Third Bank, U.S. Bank, Bed Bath & Beyond, Occidental Petroleum, Comcast. I like Comcast. It incorporated in 1964. They get over 60 million customers paying them a monthly for their service. American Express, Bristol Myers Squibb, Cisco, General Dynamics, J.P. Morgan. You've heard of most of these companies. That's step number one. Step number two, you need to find out if you're okay with buying them and owning them. All right? So, besides that, you take a look at AT&T. Well, AT&T is a great company. They've been around for over 100 years. You know who AT&T is. But look at the chart. Now is not the time for buying AT&T. All right? Nordstrom's. Okay, here's the low, here's the high, here's where we are right now. It's a little bit of a downturn. Let's zoom into that real quick. Okay, here's the high of the 30-day period. She goes down, she goes up, she goes down, she goes up, she goes down, she goes up, she goes down. Where do you think it's going to go? It's going to keep coming down. When it stops coming down, that's an opportunity. Then you ask yourself the question, is it a good time to buy? Well, what is that? In this particular situation for the covered calls, for my particular strategy, if I'm buying it now at 21.46, I want to sell at 21.50. Well, the 21.50 for next week is $1 20. That's over 5% for 1 week. But then you have to ask the question, and this is a serious question. Do I like Nordstrom's at 21.43? Am I willing to hold on to Nordstrom's and continuously write covered calls in? Because this week I'm getting $1.20 per share. Okay, that is over 5% for 1 week. Okay, what's going to happen next week? Well, right now it's in the middle of a downturn. Most likely it's going to come down somewhere around here before she turns around and goes back up again. Because that's all stocks do. They go up and they go down. They go up and they go down. They go up and they go down. The idea is to sell it when it's up, buy it when it's down. Okay, now I'm here twice a day. In the morning with the morning trading group, okay, which is a paid service, and then at night with you guys, and it's a free service at night. So if you see it going up and going down and you like Nordstrom's, well, buy it if you like it. I like Nordstrom's. I bought Nordstrom's many times. At this moment in time, I wouldn't, but I am going to write Nordstrom's down for next week because Nordstrom's always has a nice premium. Look at these premiums. Those are nice. Okay? Next week, I'm assuming, because today's Wednesday, we get Thursday and Friday. I've already said I have no money left because all my money's invested on Monday and Tuesday. Okay? Friday, we decide what's happening. Now, I have some stocks expiring, all right, or going away this week, so I'll be jumping into something else. I would like to look at Nordstrom's on Monday. So I'm going to write it down for Monday, Nordstrom's, JWN. And somebody wanted to take a look at Nordstrom's, so here it is. Yep, it's already written down for next week. So we've already looked at it sometime during the week, and it's written down for this week, for next week. So when you say you don't understand, it's kind of like driving a car, stick shift. Okay, I got to look in the rear view mirror, watch the speedometer, keep an eye on the gas tank, make sure the temperature's right, look in both rear view mirrors, both side view mirrors, the rear view mirror, and then judge what the person in front of me is going to do, and what about that guy coming out? It's all the exact same. It's something new. Yeah, it's a little confusing at first. But when you understand what it is you're looking at, okay, at some point you do have to do something with your money. You're either going to give it to someone else and they're going to invest it for you, right? And then you get whatever they decide to give you. Or you can step up and say, you know what? It's new. This is new terminology. Let me keep coming back. Let me keep learning. Now, you're new here, Tasha, because I'm good with names, and I've never seen that name before. So just keep coming back. Keep learning. And the number one question you want to ask yourself, does it make sense? Okay, you know who Nordstrom's is. Okay? And this is what it's doing. Okay, 30 days ago, here she is. She goes up, she goes down. She goes up, she goes down. She goes up, she goes down. She goes up, she comes down. How far down is it going to come before it turns around and goes back up again? That's a question you need to ask yourself. I'm here every night. I have no problem whatsoever looking at Nordstrom's every day. We can come back. You come back tomorrow and we'll look at it again. Come back Friday, we'll look at it again. We'll look at it again on Saturday, and we'll look again on Monday and see if it's something that interests you. You don't have to do it. Just get a feel for it. Just make the decision in your mind, right? I want to delve into this a little bit more. Okay, Dow 86. Cool beans. Let's take a look at Dow. DOW 53.19. Okay, high, low. Where was it? Where is it? Okay, 53.19. The 53s are going for 55. If we take 19 cents off of the 55, yeah, it's not going to be worth it. Sorry, the numbers just aren't there. Okay, it's actually that simple. Don't get me wrong. I like Dow. I like the company. Okay, but the chart, okay, there's the high, there's the low. We're somewhere in the middle. Fine. Okay, the numbers, they're just not working. So it's a no. What's next? I don't take it personally. Each company, what is next? 86. Da, 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 da. Did you look at Intel? Let's take a look at Intel. INTC, because I actually have some Intel. Okay, first thing, high, low was it and direction. Look at it, it's bouncing off the bottom. I love it when it looks like that. Why? Because you're going to make the most money in the stock market buying low, selling high. Well, it's at the low of the year right there. Well, that was about a couple weeks ago. Now it's on the way up. Great. 2140. What's the 2150s going for? 52 cents, that is over 2%. Now, Intel, you either like the company or you don't. Okay, either you want to jump on it or you don't. It's that simple. Never buy something you do not understand. I know who Intel is. I've been watching Intel for the past 15, 20 years. Okay, I have bought Intel 15 years ago, and I'm still buying it today. Why? Because they've been around and they consistently increase their dividends. All right, so the numbers look good. Now let's look at the chart. A year ago, it was at 32.36. It topped out at the end of December at 51.56. From there, she drops down to a trading range, okay, drops down to another trading range, and then makes this big, huge gap down. I love gap downs. They have a tendency to fill. Look at this here. Eventually, this is going to come up and you're going to fill that area. Okay? So, let's look at the last 30 days. Because the last 30 days, this is my humblest of opinions, the last 30 days give me a good idea of where it's going next. Why do I say that? Well, because you and I are the buyers and sellers. This information here is what you and I think of Intel. Okay? 30 days ago it was at 33. The bottom is right here. The bottom is right there on the 8th of August. Okay? The bottom was 1884. Well, look at it, it's slowly going back up. And right now it's at 2141. Okay, eventually this is going to fill, which means eventually it's going to go from here back up to the $30 area. But we don't know when. I like Intel. I have no problem buying Intel. As a matter of fact, I actually have some Intel. INTC right here. Okay, I got 1,000 shares at $21, $20.99. I sold the 21s and I got 39 cents a share. That's just a smidge under 2%. I like Intel. It's giving me 2% for the week. You think I really care? No, I don't. I like the fact that it's continually going up. Okay, let's go back to where we were. Okay. Next question. All right, Joe, did you like that? Joe Sullivan, Intel. I like Intel. Let's take a quick look at the seasonality. So what does Intel usually do this time of year? Now, for those of you not familiar with a seasonality chart, let's do this again. Hold on a second. For those of you that are not familiar with a seasonality chart, all the way to the left is January 1st. All the way to the right is December 31st. The blue line represents the movement for this year. This little blue dot, well, that's today's date. The red line up there represents 10 years average movement from January to December. Okay, 2014, 2015, 2016, 2017, so on and so forth, the last 10-year average movement. I want to see what it's doing right here, because this is the end of August into September. On average, this is not guaranteed. This is just average movement over the last 10 years. Well, I bring it up there, and as you can plainly see, from here, she has a tendency to go to the upside. Well, I like that idea. The numbers work, the charts look good, the seasonality looks good, so why not? I like Intel. Next. All right. All right, so let's keep on going. You like that, Joe? Alrighty. All right, let's keep going. More questions. Holy shit, I got 69 more questions. How do you guys keep coming with all these questions? All right. Temptations the Mop. Hello. Well, hello to you too. Where should I put 2,500 right now? Pizza party. Woohoo! Homer's having a pizza party, everyone. Yeah. Dude, I have no idea who you are. I have no idea what your risk parameters are. I have no idea what your goals are. I honestly cannot tell you what to do with your 2,500. Sorry, I'd love to. If you want to send me your phone number, DM me with your number, I'll give you a call. We can chat. Now, I say that, and only 1, 2, maybe 3 people will send me their phone numbers every night. Now, there's 200, almost 300 people here. If you want to really talk to me, seriously, conversation. And while I'm on that, okay, there are 27 other people pretending to be me. Okay? So when I say if you really want to talk to me, send me your number, I'll give you a call. don't be too surprised if I actually call you, because I do. I actually call people. I enjoy talking to people. I enjoy helping people with their finances, because I think us, the little guy, has been screwed over long enough by the bigger, the let's call it the establishment, the man. Okay, whatever. All right. I don't get out of bed for anything for less than 15%. Well, good for you. I'm just focusing on work and in SPYU. Well, good for you. UBXG, please. Uh-oh. See, I'm going to disappoint you, young lady. Because, number one, I've never heard of it. Okay, now I've been doing this for 20 years. Okay, if there's a stock that I've never heard of, usually it's going to be a no. UBXG. Yeah, no. Has no options at all. So apparently you weren't paying attention. When I say I like to have 20 years of increased dividends and weekly options. Okay? What about Levi's? Ooh, Levi's. Levi. I don't think I've ever bought Levi's. And there's your reason why. It's a monthly optionable stock. What does that mean? Well, it means I can only do an option once per month. Now, I admit I did not go to college, but I do know that 52 stock options are better than 12. I don't do it, and they never, ever, ever work out. So I just don't do monthlies. Sorry. Okay, Soft Glamby Gris. That's an interesting name. What is your number one dividend stock with the highest potential? Best regards. Oh, Alex, that was Macy's. Wow, thank you. Hey, many Mannies. Wow, thank you for this wonderful financial advice. That's not really advice. I don't give advice, really. XLE is trading in the range. Strangles at 20 delta for credit. Willie Johnson. Okay, I can tell by that question, that's basically a statement. This is not the right place for you, dude. Seriously. All right? This is safe, predictable, consistent, and simple. All right? I don't get into the deltas. Now, I understand what the deltas are. I understand what strangles are. But this is what I call a stair-step process. This is a stair-step. This is your introduction to trading. It's simple, it's safe, it's predictable, it's consistent, and no way to lose if you do it right. Now, there's always risks. I have to admit that. But if you're doing companies that have less risk, what do I mean by that? Well, General Electric has been around for 100 years. Consolidated Edison has been around for 200 years. Coca-Cola has been making Coca-Cola for over 140 years. If you invest in those and you see risk, well, there is a chance, okay, that the world could open up and swallow every single Coca-Cola manufacturing plant on the planet. It could. Because if you believe in the magic bullet theory, you know, that bullshit where a bullet can stop midair and turn 90 degrees and then turn around and wait before it goes forward, you believe that bullshit? Yeah, you believe that Coca-Cola could disappear overnight. That's what they say about risk. If you buy Coca-Cola, could it go to zero? It could. Is it going to? Is Ford going to disappear? Okay, Ford's been around for over 100 years. General Motors has been around for 100 years. Pick your stocks diligently. Ooh, I like that word. Diligently. Never buy something you do not want to hold long term. If you buy it and you think to yourself, hey, I like this, I want to hold it for a long term. Great. If you like Levi, wonderful. I won't do Levi because it has monthly options. Monthly options don't work for me. All right. You still want me to look at UBXG? Okay, you ready? UBXG for the third time. No. And I don't understand why you're not understanding when I say no. Because it has no options. Okay? It means I'm going to buy it and I'm going to wait for it to move up. But the hell no am I going to buy it at the high. What is it? 3 months ago, it's at $5. Now it's at 34.5. Hell no. That pony's already came and went. No, thank you. Marathon. CP. Let's do Marathon. MARA. Somebody else wanted to look at Marathon today. First thing, as always, high, low, where was it, where is it, and what direction it's going. Look at this little bump up right here. I like that. It's going to the upside. Great. But before I continue looking at the charts, I want to look at the numbers. 1765, the closest strike price to that is going to be the 1750, and it's 96 cents. Oh, that's nice. Let's pull that one up. Clear that. 96 cents. Okay, 17, if I buy it at 1765 and I sell the 1750s, yes, I know I'm going to lose 15 cents right at the top. So we take the 15 cents off of there, and now we're getting 81 cents a share. Okay, so you take the 96 cents, right, and we subtract the 15 cents we're going to lose. So I'm walking away with a profit of 81 cents per share. I know it doesn't sound like a lot, but let's do some math. If my profit is going to be 81 cents a share and the stock price is 1750, now why not 1765? Well, because I already subtracted the 15 cents out of the equation, right? Now, if I want to leave the 15 cents into the equation, well, I have to change that also. But you take the 15 cents out of the equation, I'm walking away with 81 cents. Now, if I'm selling it at 1750, what is my rate of return for the week? 4.62. Now, I'm going to write that one down also for next week. And I actually do own Marathon at the moment, don't I? Yep, I have Marathon right here. Now, I jumped into Marathon at 1647. And I sold the 16s for 90 cents. Thank you very much. That's over 1%. All right, what's next on the list? Dividend stocks with 20 years of increased dividends. Only thank you, 86. Does a stock, Charlie, I know what you're talking about. What's your thoughts on Levi? Okay, Katana Blade, we already looked at Levi, and it's a monthly optional stock. I don't like monthlies. They just don't work for me. And they go sideways too, huh? Yep. What do you do if it goes past 19? I have no idea which one we're talking about now. Can a stock have earnings directly from its stock value? Thanks for sharing your expertise. Charlo, I'm not 100% sure what you mean by that question. Can a stock have earnings directly from its stock value? I'm not sure what you mean by that. Do you trade daily or weekly? Oh, I trade weekly, Tasha. No way! No Nordstrom's. That like buying Macy's. Okay. Who is that? Bow Tie Specialties. Alright, Bow Tie Specialties. You buy what you want, I'll buy what I want. People are spending in Walmart, Target, and McDonald's, Costco to save money. Okay, I get that. I understand that. I'm not arguing with you. Okay, I like looking at certain stocks. I like Walmart. I like McDonald's. I don't like Costco because it's out of my price range. Sorry. Charlo, yeah, the dividend, but blah, blah, blah. Learning a new terminology is a nice way to put it. There you go. Way to go, J.A. Montana. Thanks, 86. You got it. What website do you use for statistics? Well, interesting you say that. I use several websites. Number one, Google. Simple. It's easy. I take a look at Google and I say, hey, what are the dividend stocks that consistently increase their dividends for 20 years or more? And then, boom, there it goes. I got the nice big fat list of all these companies that increase their dividends consistently. Then I go to Yahoo Finance. Yahoo Finance, a lot of great details in there. Okay, Thinkorswim also has a lot of great details. Okay, there's a lot of places you can find good details. But the thing is, find a strategy you like first and then work from that way. Right, CP, Intel is killing their dividends though. Yeah, I get that. I do. But there's certain stocks I cut slack to. Now, Apple, for instance, I trade Apple, but Apple is not on my personal trading list. It happens to be on Warren Buffett's list. Because Apple doesn't have 20 years of increased dividends, yet I still trade it. There are other stocks I still trade, even though the dividends are a little bit funny. Now, 3M okay, 3M, has been in business for over 100 years. They've actually increased their dividends for 62 consecutive years. 62 consecutive years. That's longer than I've been alive. However, 3M has cut back its dividends at the beginning of the year. Did I take them off my list? No. It's still on my list because they've been in business for over 100 years. Certain stocks I do cut some slack. FCX, never heard of them. FCX. Fremont. Okay. Fremont. Well, let's take a look at how often does Fremont, FCX, increase their dividends. Okay, number one, no. Okay, Fremont has been paying dividends since 2018. 5 cents, 5 cents, 5 cents, 8 cents, 15 cents, 15, 15, 15. Yeah, no consistency and no longevity. There are too many other good quality companies that I would prefer rather than a company that has, what, less than 10 years of increased dividends? They don't even increase it every year. Okay, I just did FCX. Intel is garbage. Well, DMV, thank you for that. How you cover call if it keeps dropping? Simple. Okay? Now, where you enter or where you jump on the merry-go-round is one thing. Okay? Now, if I bought FCX here at 55, I can sell covered calls all the way down. Okay? Because here they are right here. Look. 42, 42.50, 43, 43.50, 44, 44.50, 45, 45.50. It keeps going on and on and on. As a matter of fact, let's do this. Let's change this and do all the options available. Well, look at that. I can sell the 29, 29.50, 30, 30.50. I can sell any one of these options I want. The risk comes in when I sell an option with a strike price below my purchase price. There's where the risk comes. Okay, so if it is at 43.89 and I bought it at 54, well, I'm not going to sell this call strike. It's too close to where it is. I will sell this one or this one because it's further out. You got a number right here, R. That R means range, the range of the day. From the high of the day to the low of the day. What was the range? What does a stock normally move? Well, that number right there, the range, gives me an idea of what the stock moves on a daily basis. Great. So what does it usually do on a weekly basis? Well, I zoom in a little closer. Take a look. It goes up, it goes down. Up, down, up, down, up, down. Okay, now from here, it's starting to go back up again. Stocks move predictably. They go up, they go down. They go up, they go down. It's all about the numbers. Where you jump on never changes. If I buy tomorrow at $44, that number will never change until I dollar cost average down. So if I buy it at 44, that's way too many. Okay? If I buy it at 44, I can sell somebody the rights to buy it from me at 46. Well, that's over 1%. That's what I'm looking for. But the main question, the major question is, do I like this company at this current price? And am I willing to hold it for as long as I have to hold it until it reaches the target that I want? These are questions you need to ask yourself. Because most people buy stocks and hold them for decades. The longest I've ever held anything is 9 months. Holy shit, we're at 237. I always said if we're over 200, I'll stay on. I'm going to stay on as soon as it goes back below 200. Can I see your dividend calendar? My dividend calendar. There you go. There's my dividend calendar. Screenshot. There you go. Wonderful. Learn. L-U-R-N. Now, Learn, that's, whose company is that? Oh, I remember that dude. Young guy. I missed some. I missed a whole bunch. Alright, Bama Redneck. Use blah. You may not get the 1%, you can do something as long as okay, blah 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 blah. Wynn Resorts a buy. Ooh. Wynn. I bought Wynn over 3 months ago and I still have it. So let's take a look at it currently. WYNN. Okay, so high, low, where was it, where is it, what direction? So it's bouncing off the bottom here, 70, 72, and it's going to the upside. Now it's at 77. Okay, fine. What's the numbers look like? If I buy it tomorrow morning, 77, 78, I'm going to look at the 78. So 78 is over $1, which is over 1%. So here's the question. Do I like Wynn? Do I want to buy it, and do I want to hold it for as long as I need to hold it? What stock is that? WYNN, Wynn Resorts. D-Money. Ooh, Jesse wants to take a look at Nike. NYKE. Nike. Take a look at Nike. High, low, where was it, where is it, where is it going, blah, blah, blah. 84.09 to 84s are going for 135. That's over 1%. Look at this little jump up. Here's our bottom right here. Now, I remember when Nike was here and it made this big drop. I bought a bunch down here. And now I still own Nike in a different account with a different strategy. Okay, so I'm sharing this strategy with you. Safe, predictable, consistent, 1% per week. Great. It's simple. It gets about 50% per year. Now I have other trading strategies that get more, but I don't give those away for free. Terribly sorry. This is just an introductory. You don't need anything else. This is all you need. Simple, safe, predictable, all that kind of nice, neat, fun stuff. So that's Nike. Last 30 days for Nike. Here we go. Nike's a big fat no this week for me. This week. Now I already own some, but look, 30 days ago we're over here at 73. We bottomed out here at 71. Then we shoot up there. Well, what do you think is going to happen next? Well, more than likely there's going to be profit taking. Because if you bought it down here at 71 and it's at 84, that's a $13 move. A $13 move on a $70 stock, well, that's a little bit less than 20%. I'm out at 5%. You know, I'm not greedy at all. I'm not looking for stock appreciation. I'm looking to collect this little thingy right here, that premium. Safe, predictable, consistent. If I buy it tomorrow morning at 84, I sell somebody that writes to buy it for me at 84, I'm collecting $1.35. Well, that works for me. Let's keep on going. Hey, J Cakes, what's happening? Oh, good evening at Fascinating Football Videos. Dude, come on! It's 11:24 and you're just getting here? Well, I'm giving you a hard time, man, because you always show up late to the party. You're that guy. That guy. Invite him to a party. Hey, what time do we start the party? 9. What time does he show up? 11. How do we pick options to trade? That's an interesting question. It really depends on what your goal is. My goal, now I can only tell you what I do. My goal is specifically a safe, predictable, consistent 1% per week. How do I do that? I find a good company. Well, I consider Nike as a good company. At this moment in time, Nike's at $84.09. Okay, so if I buy it at $84.09 and I do a covered call is one of the safest trading strategies there is. So if I sell a covered call on an $84 stock, I'm bringing in $1.35 for next week. Okay, $1.35, that's a nice. Now, I'm not looking for capital appreciation. Some people are. Some people want to buy it here and take that run up. No, I don't. That's too much work for me. I'm lazy. I do not want to do it. This takes me 10 or 15 minutes a day. 10 or 15 minutes, I take a look. Am I buying it for that? Well, where's it going? Well, it's at the upside. Great. What am I getting? I'm getting $1.35 on an $85 stock. Okay, that's over 1%. That's what I'm looking for. Safe, predictable, consistent, 1% per week. That's it. Nothing more, nothing less. Hey, Softball Gamby. How are you doing? Bump-a-da-dum-bump. More questions. Where do you think about Spirit Airlines for an option until 2026? Definitely the wrong question. Okay, number one, Spirit Airlines does not have 20 years of increased dividends. It's not on my list. Number two, I don't buy options. Okay, I only sell options. I've learned my lesson from many, many years of losing money. Okay, now I've been trading for over 20 years. My first 5, I made money and I lost money. But in 2008, my daughter wanted to learn to trade, so I had to come up with a trading strategy specifically for her. Okay, it had to be simple. Safe, predictable, consistent, and so on and so forth. For those of you guys who have not been introduced to the little princess,
And Pete, as you being part of my... Hi, I'm Tracy, and Pete, as you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting.
Still make about 20% a year. It's easy. One trade a month. Who can't do it? Wow. You want to pump it out a little bit this?
Okay. That was 12 years ago with the little princess. Okay? Now, I had to keep her entertained, so yep, some of the videos were a little bit on the silly side. But I've been doing this for a while, and back then, when I taught her how to do this, simple, safe, predictable, consistent, no way to lose, 5 rules came along with it. Number 1, never buy something you do not understand or you do not want to buy and hold for the long term. That's my intention going into every stock. I'm going to buy it, I'm going to hold it for a long period of time. CAVA, C-A-V-A, no, it hasn't been around 20 years. Okay, it doesn't have 20 years of increased dividends. The only companies that I like, rule number 1, never buy something you don't understand. Rule number 2, never sell a loss. Rule number 3, make sure, this is important, make sure the company is consistently profitable. That means, are they consistently profitable? Well, how do you find out? Well, you can read the annual report every year. You can listen to the quarterly reports every year. You can listen to the earnings. You can do all that crap if you like. But I like to cheat and take the easy route. What is that? Dividends. A dividend is the profit in which the company gives to the shareholders. So, if the profit the company gives to the shareholders increases every single year after year after year after year, well, that only means, logically, is they're consistently profitable. If they're consistently profitable, well, that's what I want to invest my money. Okay? I don't invest in anything that doesn't have a good reputation or good historical performance. Okay, Shaz, you want to be invited. I'm going to say no because I don't know who you are. If I had a conversation with you and I know what you want to talk about, yes, I would invite you onto the live, but I have no idea who you are. Okay, Viviana, I don't know you either. Okay, now, if you really wanted to be invited to speak to the audience, fine. Send me your number, we'll have a conversation. If I feel you can contribute to the conversation without talking about NASDAQ, NASCAR, Amway, cryptocurrency, or politics, great. No problem whatsoever inviting you onto the show. Other than that, no. So CAVA is a no, I don't know. They don't have 20 years. Where do you think, okay, blah, blah, blah. Can I see your dividend calendar? I already showed you that. Learn when, we already did that. Dividend stock, Kava, baby. Okay, CAVA doesn't have 20 years of dividends. Sorry. That doesn't count for change. Okay, no idea what that means. Colby, thank you. STKS. Never heard of it. STKS. One Group Hospitality. Yeah, no. Can see, XAUUSD. Yeah, that's Forex, buddy. I don't do that. Alrighty. Thanks, 86. GIS. Ooh. We have not done General Mills in a while. General Mills. $71. $71.60. Bummer, dude. Number just doesn't work. I didn't even have to look at the chart. Okay, if I'm not going to be compensated for my time, money, and energy. Yeah, no. Sorry. Circle Project. Hello, James. Happy Wednesday. Barbara from Pennsylvania. Thanks for the invite. Cool beans. Dawn. Good. Ooh, wait a minute. Isn't good a company? G-O-O-D. Gladstone. Yeah, no. Sorry. Monthly optional stock. It's actually very simple. I'm kind of confused why people get this why people get this wrong. Okay, 20 years of increased dividends and weekly options. That's the only two things I asked for. 20 years of increased dividends and weekly options. That's it. SAIC. Yeah, hell no. What do you think about Corsair? CRSR. That's probably going to be a no also. Yep, no also. Newbie here, Robinhood, a way for me to start. I love Robinhood. It's simple, it's easy, it's right there in your hands. That's where my grandson's account is. Okay, simple buy, simple sell. I can actually do it while I'm on the potty. I was thinking of coming up with a trading strategy called potty trading. Potty trading. So you can actually trade while you're sitting on the chair. Okay. Doing options better than buying stocks? It depends. Now, I like selling options because it's simple and it's easy and my stocks are protected. So if I buy a stock at 15.58, I will always own it until I decide to sell it. Once I decide to sell it, well, I want to sell it at a profit. But what I can do with it, I can sell options against it and bring in what they call premium cash flow. Okay, and I can do that on a weekly basis. That's why I like weekly options. 23 August, that's this Friday. 30 August, that's next Friday. 6 September, that's the Friday after, the Friday after, the Friday after. Every single Monday, I sell weekly options on a stock that I like. Thoughts on Bitto? Bitto, he buys shares. Okay, now Bitto, we tried a calendar spread on Bitto, BITO. It is an ETF attached to Bitcoin. Now I jumped in at 30, okay, and I also jumped in at 27. Look where we are now. Yeah, I got out of that calendar spread because it was consistently losing. So why would I do a position that consistently loses? How do you make 1% on stocks going down? Thank you for your help. Okay. Once I buy the stock, 15, here we go. Macy's. I actually have Macy's. At 17.49. See? 17.49. You look at the chart on Macy's. Currently, right now, 17.49 was here. Okay? Now it's down here. Alright? So, how do I make money if the stock goes down? Well, at 17, here's the 17 right here. It's going for 8 cents. Okay, you're still bringing in something. But the 17 is so far out, next week I'll do the 16.50. The 16.50 is going for 11 cents. Well, that's flat. If I wanted to go to 16, which I'm not going to, that's a little too close to where it is. Right now, this is the current price right here. 16, in my opinion, is a little too close. So I'll go for the 16.50 or the 17, and I'll still make money. But I still watch it every day. And Zaracute. Well, hello and how are you? You want to be invited? First of all, send me your phone number. We'll have a conversation. If I feel you can contribute to the conversation, I will invite you. Other than that, no thank you. 47 more questions. Let's see how quickly I can do this. GES stock? No. I love the shirt. Well, as soon as I get it online, you'll be able to get one if you like. How do you calculate 1%? Mahesh, dude, how are you? You've been here for the past couple of days. How do I figure it out? Well, here's the purchase price. Here's the strike price. I take this, which is my profit, and I divide it by that, and that will give me my percentage. GES. Never heard of GES, so if I've never heard of it, more than likely it's going to be a no. GES. Yeah, monthly. No. I need to watch this live on a big screen and not my iPhone. Tasha, this is live on YouTube. Hold on one second. Right here, splash page. What the hell happened? Uh-oh, my screen just went black. You know what that means? It's 11:30. Time to quit. Woohoo! Oh, damn it. There it is. All right, splash page. YouTube. You ready? YouTube. Okay, this is my 10minutetrader.com. It's my splash page right here. And it's going to go over to the 10-Minute Trader at YouTube. And there it is, right there on the big screen. Oh, damn it. There it is. All right, splash page. YouTube. You ready? YouTube. Okay, this is my... Okay, so, Tasha, it is live on YouTube. So, hypothetically speaking, you can sit on your nice comfy couch or your recliner grab a Pepsi, grab a beer, grab a wine, a spritzer, whatever you like, some popcorn, and you can actually watch it on your big screen TV. But it is past 11:30. There is less than 200 people. I was getting a little nervous there because I saw 300 at one point. I said, damn, I'm going to go past 11:30. But it is what it is. Would appreciate, and even, yep, all right. Hell's Cat would appreciate CRSR? No. MLKN? No. Pays a dividend and is under the radar? Yeah, no. Now, see, I've been doing this long enough. If you actually think, seriously, if you actually think that in the 20 years I have missed a company that has paid and increased its dividends for 20 consecutive years, I get no problem whatsoever in admitting it, saying, I was wrong, you were right. Okay, so since January, only 2 have escaped me. One of those was General Mills. And the other one was Whirlpool. General Mills and Whirlpool. For some strange reason, I just missed those two. I know nothing but the fact of my own ignorance. Christian, Socrates once said, all I know is that I know nothing. Dividend stocks drop prices after EX date. You're absolutely right. They do. Uh-oh, I missed some questions. 1% a week, great profit. You explain things so well. Excited for morning learning. Charlo, cool beans. ORG was realigned, so 2 companies basically. Okay, Hassan Pfeffer, cool beans. ORG, what the heck is ORG? ORG. Yeah, no options. Come on, Hassan Pfeffer, you've been here long enough. Seriously, you've been here long enough. You should know. If it doesn't have 20 years, 20 years of increased dividends, I'm not looking at it. I missed a bunch. Yeah, I saw that. Win charts. Okay, we already did win. You can pay attention to dogs. DOGZ, no. EHGO, no. VRAX, no. FLYE, recently, and it will definitely make a profit. Okay, save to invest. Now, you've been here for a couple of times. You have. Okay, I remember your name. You've been here a few times. And you know I will not look at companies that do not have 20 years of increased dividends. And I will not look at companies that don't have weekly options. Every single one of those. DOGZ. Hell no. EHGO. Hell no. VRAX. Hell no. And FLYE. Dude, you got the quadrifecta. I've never even heard of the quadrifecta. I've heard of the trifecta. I heard of a hat trick. You got 4 lemons in a row. 1% a week, great profit. You explain things so well. Thank you. ORG, yep, you know that one. I already did that one. What a proud father. Thank you. All right, MLKN. Nope. Wait a minute. MLKN certainly has 20 years of dividends. Ooh, MLKN. I don't care if they have 100 years of dividends. It is a monthly optionable stock. Now, I'm not quite sure where you went to school, but where I went to school, 52 is a lot better than 12. Okay, if I can do a covered call once per month, that's 12 per year. Once per week, that's 52. Where I went to school, 52 is better than 12. You probably love Coca-Cola. No, I don't. Don't get me wrong. They've been in business for over 140 years. The premiums are horrible. Okay? KO, Coca-Cola. Right now, $69.57. 69s are going for $1. The 70s are going for 43. If I do the 69s, I can take 67 cents off of it. Okay, then what? 33 cents? Hell no. Coca-Cola never, ever, ever has a good premium. MLKN, Hellcat, no. Forex is cool though. Yes, it is. You have to sit there in front of your computer all day long. You're trading your time for money. At some point in your life, money no longer has the meaning that it used to. That's where I'm at. I don't do things for money anymore. I do things for time. Okay, if I can spend 20 minutes a day, make 1%. Now remember, the account I showed you, okay, this account here, just this one, I'm not counting these, just this one here, $142,000. Okay, 1% a week is $1,400. $1,400, 20 minutes a day, 5 days, well, that's a little over an hour. A little over an hour to make $1,400, you do the math. All right, then you're looking at what? 1, 2, 3 three accounts? Yeah. I have 6 accounts. So think about it. 20 minutes a day. Well, it's actually the 10-minute trade. It actually takes me about 10 minutes to do my own personal one. But then when I start adding more, it gets a little more. How is Moo? I have no idea who Moo is. Plugs are no. Writing covered call is one of the safest trading strategies. Thank you, 86. What are options? Options? All right, you ready for options? Left, right. Well, there's your option. Left, right, up, down. Options. Okay, I can go up, I can go down. I can go right, I can go left. Amen. I can go left, I can go right. An option is more or less an opportunity to do something by a certain time. There's a call option, there's a put option. I like call options because they're simple and easy. Put options get a little complicated. Paul, what do you do if a stock flies up too fast? Do you buy too close to the and lose money? All right, Paul, let's go to one. No. Let's go to Macy's. I always go back to Macy's. It's simple and easy. Okay, so from the question you're asking me, all right, if tomorrow morning I buy it at $15.58, if I sell someone the rights to buy it from me at $15.50, all right, I lose 8 cents off the top, but I'm collecting 43 cents, which is more than a 2% return for the week. Okay, so we understand that so far? If I buy it here, I sell this here, okay? I've already locked in my profit. That's the profit I'm looking for. Now, your question. If it goes from $15.58 and shoots up to 22, 23, 27, 93,000, I really honestly don't care. My main concern is this, not this. I'm not looking for capital appreciation. I'm looking for a safe, predictable, consistent return. I mean, it's 43 cents, it's 2% of the sale price. That's what I'm looking for. So if it jumps up, I honestly don't care. Seriously, I don't. My main concern, I have a couple of main concerns. Number one, how consistent are they with their increasing of their dividends? Do they increase consistently? That's my number one question. Number two is going to the calendar. When are they paying their dividend? The reason why I'm asking when they're paying their dividend, because the stocks go up in value. It means the price increases before the dividend. Each one of these little green dots represents a company that I like. So if I want to buy it, great. I buy it 2 weeks before the green dot. Simple. Did you hear that? Simple. First, how consistent are they with their dividends? Second, when are they paying the dividends? Third, where's the high, where's the low, where was it, where is it, what direction is it going? That's third. Where is the stock currently moving? Fourth is, what is my rate of return? What am I buying it for? What am I selling it for? Is that more than 1%? It's really simple, safe, predictable, and consistent. That's what I'm looking for. It was created for a 9-year-old. Adults, people over 9 years old, have a tendency to complicate things. Options are right to buy or sell. Yep. Oh, wow. All these questions. Oh, I'm almost done. Almost done. ET, energy transfer. Love it. Following on YouTube. Tasha, way to go. Currency pairs. Okay, Ashley, I don't do Forex. Dividend stocks only. I'm terribly sorry to Miss Ashley. Mahesh, does your private group make more than 1%? Most of them do. Burlington, Mahesh, I will have to. Oh, you're in Burlington, Mass? Kind of curious. The ORG was referring to WIN organization. Okay. Can you show us how to identify if a weekly option or not? Oh, simple. Okay? You ready? The auction chain down here. See the date? 23 August, that's this Friday. 30 August, that's next Friday. 6th September, that's the Friday after. The Friday after, the Friday after, the Friday after. Okay, monthly optional stocks. September, October, November, December. Simple enough? All right. If the stock flies up, do you buy to close at a loss? Paul, you aren't paying attention. Okay, Paul, listen closely. Okay, if I buy this particular stock tomorrow morning, I'm paying $15.58 based on the current number here. You do have to realize tomorrow morning when the market is open, all these numbers are going to change. But the strategy and the numbers and the equation doesn't change. This is the purchase price. These are the strike prices. If I buy it for this and I sell it for this, I collect this. If the stock shoots up, whoever bought that from me, this option, whoever bought the option from me, gets to take advantage of the capital appreciation, not me. Okay? My goal is 1% per week. I want the premium from the option. That's all I want. I really don't care. And I don't understand why you don't understand this. Listen closely. Once I collect my profit, this is my profit, I honestly do not care if it shoots up to the moon. I honestly don't care. If I buy it, I sell it, I collect this, whichever one it was, this. That's what I want. If the stock goes up, great for whoever bought it. Okay? This is what I'm selling it for. This is what that person is paying. Okay? If I'm buying, I'm paying this price. If I'm selling, I'm collecting that price. If the stock goes up, I honestly don't care. Okay? Denali, let's do this real quick. Okay, good question. I gotta show you one. All right, so hypothetically speaking, same scenario. If I like this stock, 1558, I sell the 1550s, I collect that. Well, let's do it. Okay, let's go out of there. Let's change this to where it says covered stock. And I said I like the 1550s for next week, not this week, but next week. Okay, there it is right there. I'm going to buy 1,000 shares of the stock and I'm going to sell 10 contracts. For each contract, you need 100 shares. 200 shares, 2 contracts. 500 shares, 5 contracts. The way I have my account set up, it already presets it for 1,000 shares. Okay, so I'm going to change this to a market order because I want it filled instantly. Now let's take a look at the order. This is what the order looks like. Now, I always tell people, read it out loud so you can hear it because your eyes can deceive you. I have made that mistake many times. So, here's the order. Buy 10 covered Macy's 100s. Those are the weeklies. 30 August 24th. That is next Friday. The $15.50 call option, along with buying Macy's at the market. To open, to open. Why does it say to open, to open? Well, I'm opening up a stock order, buying 1,000 shares. I am opening up an option order. I am selling 10 contracts. The next line, break even stock price, $15.10. Well, right now the stock's at $15.58. Well, great. As long as it's above $15.10 by Friday, I'm making money. All right. Maximum profit, $400. It already tells me. Remember what I say? I want safe, consistent, predictable, and simple, safe, consistent, and predictable. Okay, simple. Yes, it's a simple strategy. Is it safe? Well, I consider it to be safe. Is it predictable? Well, here it is right here. $400. So let's get out of there. Okay, my profit. Okay. Max profit says right there. Where is it? Right there. Max profit, $400. Okay, cost of trade including commissions, 15,106. So I divide the 400, that's my profit, by how much I am paying. I am paying $15,106, and if you really want to be anal about it, 50 cents. Okay, that's what this trade is costing me. Hit the equal sign. Well, look at that. It's a 2.6% return for 1 week. 2.6. I like 2.6% for 1 week. 2.6% for 1 week every single week for 52 weeks comes to a grand total of 137% return for the year. Now, I don't tell people that because they get a little queasy. I like safe, predictable, consistent 1% per week. That's my goal. Every once in a while, I will get a company that will give me 2, 3, or 4% per week. Does it happen all the time? No. Does it happen more often than not? Yes. Well, especially with Macy's. Macy's is my biggest winner for the year so far. And the stock keeps going down. Well, why do I keep making money if the stock goes down? Well, because I'm doing safe trades. Please explain how you enter your trade. I just did that, didn't I? 1,400, that's awesome. Uh-oh, there's some questions. Coach Joel, but you're on TikTok significantly longer than 20 minutes a day. Love how you share your knowledge. Okay. Yeah, you're right, I am. Okay, now, I'm retired, so I need something to do to occupy my time. All right, I am used to, I grew up in the 60s, 70s, and 80s. I am used to going to work first thing Monday morning and getting paid on Friday afternoon. That's what I'm used to. Okay, so I jump on at 9 o'clock in the morning, I make a bunch of trades, and I'm on every single morning with the trading group. If you guys are interested, it is a paid trading group. And you guys actually watch what I do. You actually watch me make these trades. And then you can ask me any questions you want, and I stay as long as you want. Then on Friday at 3 o'clock, well, that's when we get our paycheck. I jump in on Friday at 3 o'clock and I see where are my positions. What do I have to do in order to best what's the best move on Friday? 'Cause I don't know until Friday gets here. Why does the max loss, let's say max loss when I try to sell options? Well, to be 100% honest and clear with you, where it says max loss, okay, let's say hypothetically speaking, you do this position and it's going to cost you $15,106. Okay, what happens is after you buy that, earthquake comes and swallows up Macy's and Macy's disappears off the face of the earth and you lose that money. That's what it means. Okay, you're putting up money into Macy's. The company's 100 years old. Okay, do you really think it's going to disappear overnight? I don't. But legally, they have to tell you. Okay, you are risking your money. When you give your money to a money manager, well, they're going to take that money and they're going to invest it. They're going to invest it into Home Depot, Lowe's, Merck, Johnson & Johnson. They're going to take it. Are they at risk? Well, yes, they're at risk. Johnson & Johnson could disappear overnight. Doesn't look like it's going to. They've been around for 100 years. They've seen a lot of shit. Macy's, same thing. They've been around for 100 years. Ford, over 100 years. Now, some of that other crap you were asking me to look at earlier, never heard of them. Well, those companies, yeah, there's a lot. You know, a company that's 2 or 3 years old, higher probability of losing than a company that's 100 years old. So, it says it is a maximum loss. Okay, so if you put your money on the line, $15,106.50 for this particular trade, give me a call, let me know, so I cannot put my money in the same trade you put it in if you think Macy's is going to be swallowed up and disappear overnight. That's basically what it means. Okay, if you buy something, there is the opportunity, or there is the chance it could fall off the planet. Ford could fall off the planet tomorrow. If you believe the magic bullet bullshit that the government tried to pass off to us when they killed Kennedy, well then, maybe you will believe that Macy's could disappear overnight. I don't think it's going to happen. But I could be wrong. But remember, it's your money, your decision. You have to do what's right for you. It's past 11:30. Holy shit, it's almost 12. And I still have more questions to go. To build on Paul's question, What if you're on the second or third week? Do you roll? Well, of course I roll. Okay, on Friday at 3 o'clock. There's a reason we jump in at 3 o'clock. Because the market closes at 4. And at 4 o'clock, all those weekly options expire. They're either going to be in the money, out of the money, or expire worthless. Then you got to figure out what are you going to do. Well, that's why we jump on at 3 o'clock. What is the best choice? What is the best decision for this situation? Now, it's hard for me to give you examples because we're in a Wednesday afternoon. If it was 3 o'clock on an afternoon, 3 o'clock on a Friday, well, yeah, I can give you a better idea. But yeah, I like to roll forward. I don't like selling at a loss. Because the stock can shoot up quickly and you're out of the spread. Yeah, but Paul, I get what you're saying. Seriously, I honestly do. But once I collect the premium, okay, once I collect that premium is mine. Okay, so Monday morning, I buy my stock and I sell the option. That premium is mine. Goes to my account directly right away. Yeah, Neil, it is past bedtime. I get that. But I want to go through some of the questions. I don't want people thinking I'm ignoring them. Okay? So, the stock could jump up. I still collected my premium. And I really honestly don't care if the stock goes up. If I buy it at $15.50, I sell somebody the right to buy it from me at $15.50, I collect that premium goes into my account as soon as I sell it. What happens to the stock after that, I honestly don't care. If it drops, great, I'll hold on to it and I'll do it again next week. Because I never buy something I'm not okay with holding on to long term. If it shoots up to the roof and somebody buys it from me, great, good for them. Come on, get steaks. Can you look Zim, please? No, we'll look at it tomorrow. Maybe tomorrow, Mesh. Alright, so you look to sell calls 2 weeks before the dividends are paid. Exactly, Alex. Yes, thanks. What website is that? The 10-Minute Trader. Paul, where are you from? From where they taking money? Okay, I have no idea what he means. So, $100 stock you need to sell at 101 plus premium. No, not at all. If the stock is at 100, okay, and I sell the premium for someone to buy it from me at 100, I'm collecting that dollar. And if it is above 100 come Friday, I get my $100 back. And whoever bought the option, well, they get the stock. Okay, if not, if it's at $99.99 come Friday, well, I still get to keep the dollar, and then Monday I'll still have that stock. Or either you lose the shares or sign, or you buy it to close. Yeah, that works. Oh, I'm almost done. Powering, buying calls, you only win if the stock goes up. Yeah, apparently, Paul, you weren't listening. Okay? I do not buy calls. I do not buy, well, I do buy puts, but I don't do it here. Okay, I do not buy calls. I'm selling the calls. And I'm hoping it goes to zero. Right? How much the pay group? The pay group's $100 a month. Buying calls are a 50-50 gamble. Yeah, I don't buy calls, Paul. And I don't remember how many times I have to tell you this. Will you look at my trades as part of the private group? Yeah, absolutely. That's what the private group is for. The private group is for you and me to interact together. Now, there's about, about 50 people on there in the morning. I have no problem staying on all day. I have nothing else to do with my time. Okay, I'm retired. I have nothing to do. I feel guilty when I get up in the morning and say, what am I doing today? I got no freaking clue. Can you lose more than you put in? Only if you sell at a loss. If I buy Macy's at $15.58 and the stock drops to $10 and I decide to sell it at $10, well, that's my own damn fault. Never buy something you do not want to hold on to. Always buy as if you're going to hold it for the rest of your life. Question: How does one look like when they turn into a pumpkin? Oh shit! Look at that. All done with the questions. Woohoo! Done for the day. You guys have a great day. We'll see you again tomorrow. Tomorrow. The sun will come out tomorrow. Bet your bottom dollar that tomorrow there'll be sun. Just thinking about tomorrow. Wipe away the cobwebs.